Video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
It is midday in London, 7 a.m. in New York and 8 p.m. in Hong Kong. I'm Tom Mackenzie. Welcome to Bloomberg Markets. Our top stories today: European stocks in the red as traders question the prospects for a diplomatic meeting between President Joe Biden and his Russian counterpart, Vladimir Putin. We'll have the latest on the diplomatic efforts. Plus, France's economy minister says sanctions against Russia remain on the table, but won't say if they will include energy. In an exclusive interview with Bloomberg's Francine Lacroix, Bruno Le Maire indicated Europe must look to be more independent in the long term when it comes to energy. And just as the UK is set to relax COVID restrictions, Australia opens its doors to double vaccinated tourists. But first, let's check in on the markets then. And it's a sharp leg lower for European stocks. We woke up this morning here in London on news that the two presidents could be meeting, Putin and Biden. Then the Kremlin comes out with a statement saying nothing has been set in stone. We know the foreign ministers, Lavrov and Blinken of the US, are expected to meet. That is the plan on Thursday of this week. Whether or not they can firm up then the idea of a meeting for the two presidents will be something investors will be watching very carefully indeed. But it's the geopolitics that is front and center. Currently, the European stocks benchmark is down. The stock 600 down by 0.6%. It is, of course, President's Day in the US, so no trading in the markets there. But the futures are pointing to losses of 0.3%. Euro dollar is at 113, still elevated at 0.2%. We said there's some PMI data that came through. Services was above the forecasts. Manufacturing for the Eurozone was slightly lower, but still comfortably in expansionary territory. We're looking ahead to the March the 10th meeting of the ECB and whether we got more clarity on what they plan in terms of the end of asset purchases and rate hikes. Some of the markets now pricing in a rate hike from the ECB come December. The 10-year yield on the German Bund currently not doing much. In fact, a little bit of a bid there for that safe haven. The focus then on Russia, and look at the impacts then on the equity markets then of Russia. Currently down 6.5% there in Moscow, and the ruble as well under pressure by 0.8%, currently at 78. What a change in fortunes for the havens then. This risk-off mood now permeating these markets. By the way, the geopolitics, of course, is front and center, but it's also all about the central banks as well. JP Morgan coming out and saying they now see 9 hikes of 25 basis points consecutively. That takes us through to 2023. Let's look at the risk radar then, because you have had this change in fortunes. Of course, Treasury's not trading today, but the futures, the bond futures are looking like that. So a bit of a bid for haven. The S&P futures again lower. Gold, which had been above $1,900 an ounce last week, currently off to some extent. Let me just check on the exact price for spot gold to give a clearer sense. By the way, the Bloomberg dollar index is currently softer by about 0.2%. Gold is currently at 18.93, so softer by 0.3%. So there isn't a rush into the yellow metal. Again, reading the geopolitics and the tea leaves is very challenging indeed. The yen had been a safe haven, not much of a play there currently. You're looking, in fact, gains for the US dollar versus the yen of about 0.1%. So that's the risk radar as we weigh up what is happening on the Ukrainian border. Let's get more on that then. The top story: Kremlin is now saying that there is no concrete plan for a summit between the US and Russia. It comes just hours after the US tentatively agreed for the meeting with some caveats. For more, I'm joined by Bloomberg's Maria Tadeo. She's on the ground in Brussels, where Europe's foreign ministers are meeting. Maria, I know you've been following this throughout this crisis, and you're on the ground there with the foreign ministers. The back and forth between Moscow and Washington for a deal, a summit, a meeting that had been coordinated by the French President Macron. What is your take on the latest that we've heard on this?
Well, Tom, I think we need to go back to yesterday night. Of course, there was this shuttle, this frenzy of diplomacy happening between a number of countries, including, of course, the French, but also the Germans, Ukrainians, Russians, the U.S., all of this hoping to avoid a war in Europe. At about 1 a.m. in the morning, the French President Emmanuel Macron was still on the phone with Vladimir Putin. And the idea in principle is that both President Biden and the Russian leader had agreed in principle to a meeting. That meant, of course, that the biggest condition here was that there would be no invasion, no attack on Ukraine. Now, today, the Kremlin is saying that it is premature to put a date on that meeting, to talk about the preparation for that meeting. But I would be careful to read this as there's going to be no meeting. The reality is we always knew that a lot of this would depend on the meeting between Tony Blinken and Sergei Lavrov, so their respective foreign ministers. And if you look back at previous meetings, Tom, it's always the way the Russians like to do it. They send their foreign minister, he preps the ground, he takes notes, he tests the waters, and then he goes back to Moscow. So a lot of this really, we've seen this choreography before, so I would be very careful to just say that this means there's no meeting at all.
Maria, how much unity is there on the ground when it comes to that response?
Well, look, we're about to find out, because the reality is foreign ministers have been meeting here in Brussels the entire morning. We did hear from the top European diplomat, the top official, Josep Borrell, saying that he is working on this huge sanctions package and he would put it on the table to a vote when the time is right. But right now there's two big debates happening. One is, when do you trigger sanctions? When do you say that Russia has invaded Ukraine? If you speak to the Ukrainians, but also some Baltic nations behind the scenes, they tell you when you're cyber hacked and cyber attacked every day, when you see big fighting happening in eastern Ukraine, that is in some ways the start of an invasion. Then the other one is with sectors to include the Italians on Friday, saying that perhaps getting the energy out while Europe works for a plan to come or to bring down energy bills could be on the table. Again, that could be problematic for a number of European nations who say, if anything, what we should be doing is going after Russian gas.
And that brings us on to Germany. We know that Olaf Scholz is planning a phone call with Putin. Does he have that connection that Angela Merkel had with his Russian counterpart? Can Olaf Scholz play a decisive role in this?
Well, look, it's a funny question, because a lot of this, of course, always goes back to Angela Merkel. You know, she had a very unique relationship with Vladimir Putin. I'm not saying it was good or bad, but clearly they had a connection in the number of years that they were in office. Of course, they had a connection when it comes to the language, and they had a connection in terms of the amount of times meetings that they did together, and they could kind of see eye to eye. A lot of this was perceived as an advantage for Germany, but I can tell you that right now, in fact, that may be a good thing for Olaf Scholz to distance himself from Angela Merkel. A lot of commentators and officials behind the scenes tell you part of the problems that we're seeing right now are because of Angela Merkel and the appeasement that she had for 14 years on Russia. The Nord Stream 2 pipeline, this was not Olaf Scholz who agreed to it, who signed it off. This was done under a CDU, Angela Merkel government. So the fact that he is in many ways different to Angela Merkel, has a different type of relationship with Vladimir Putin, but also has come under big stress in Germany to distance himself from perhaps a Russian appeasement, could be a good thing for those that argue, well, Germany has to be much more hawkish on Russia. The time has come.
Okay, great stuff. Bloomberg's Maria today on the ground in Brussels at that foreign ministers meeting, keeping us up to speed on developments there. Let's discuss then the market impact of the geopolitical tensions with Aberdeen Investment Director James Athey. James, you went from long Russian assets to short. What took you there?
Hi, Tom. Yeah, it's a difficult decision. Obviously, these circumstances are always difficult to analyse, but you know, I try and look at this through the lens of incentives. You know, I'm very much a proponent of Charlie Munger's maxim that if you show me the incentives, I'll show you the outcomes. And it really didn't feel to me like there was an incentive for Putin to invade, because essentially, you know, the threat of invasion is a more useful negotiating tool than the actual invasion would be. And for that reason, for a period, I was comfortable holding on. But it became clear to me that actually Western leaders, I think, were seeing this as a rather convenient distraction from some of their domestic problems. And therefore, the rhetoric was really not going to be calming down easily. And now we've got ourselves into a situation which feels increasingly like a Mexican standoff. So, you know, for the portfolio that I run that has Russia in its benchmark, as you described, described. I went from a position of being long based on domestic fundamentals, the rate hikes that were already baked into the cake, the low debt to GDP, to being short on the basis that I really can't easily see a route whereby parties to this standoff can back down and still save face, and that makes it very difficult to see a near-term resolution.
Okay, so as well as going short Russian assets, are you looking for hedges? Are you taking cash? Are you putting cash on the sidelines? Are you looking to add some of those safe havens like the yen or commodities? Or are you looking for safe havens within equities, whether that's financials or energy?
No, I mean, this is one of those situations where, while specifically in relation to my Russian view, my Russian position, this outcome is in the opposite direction, broadly speaking, to our outlook, to our positioning. It is more in keeping, which is to say we've been cautious and defensive really for a period of time now. So in terms of FX positioning, for example, the dollar and the yen are the two currencies that we have most exposure to, because we feel the US dollar will benefit from both ends of the smile, that is to say a hawkish Fed and commensurately a period of risk off, and the yen we think is under-owned and will indeed benefit from risk off flows in this period of heightened risk asset volatility. Been a bit disappointed, to be honest, in the last few weeks on performance of both of those crosses, but broadly speaking that is still how we're positioned. And in terms of, again, the sort of duration view, the US yield view, to me this just exacerbates the curve flattening trend. I don't think anything we're seeing in Russia is going to perturb the Fed from doing what's necessary, at least for the next 3 to 6 months. They need to get runs on the board and get less behind the curve or even ahead of the curve. But of course, it's another big negative growth shock. It's another big negative sentiment shock, and that should support duration at the long end. So the curve flattener still looks like a winner to us.
And I think, James, it's fair to say you've been pretty critical of the central banks and the way they've handled or adjusted to the new normal. In terms of your level of confidence then, that they engineer a soft landing, where does that stand?
I mean, even if I hadn't come from a position of being highly critical, which, you're right, Tom, I absolutely have. I've been very critical of their actions. I think they've been working from a rather out-of-date textbook and trying to shoehorn the modern world into an abstracted view of the global economy and the global financial system with increasingly dangerous-looking consequences. But even if that hadn't been the case, history would say the chances of engineering a soft landing are very, very low indeed. And I think the particular trade-off that they face here in terms of growth inflation, the type of inflation we're seeing, the magnitude of it, and the extent to which it is increasingly entrenched, the path forward for them is perilous. And if they were to be able to tread that middle ground and take just enough out of economies to deflate those inflationary pressures in a gentle fashion without disrupting risk assets, which have been as expensive as at any time in history, with leverage in the financial system incredibly high. If they managed to tread that middle path, I would be forced to doff my cap, because that would be an amazing outcome.
Okay, James Athey, as ever, we always appreciate your insights. Thank you for coming on the show, and have a great rest of the Monday from Aberdeen Asset Investment, of course. Okay, coming up, part of my colleague Francine Lacquoire's conversation with French Finance Minister Bruno Le Maire. I didn't get to put the question to James Athey. He's short France. We'll have to find out why later. But we're going to hear from the Finance Minister, Bruno Le Maire, on all things energy, geopolitics, and the outlook for the French economy as that country gears up for elections come April. The markets across Europe looking at losses of 0.7%. The Bloomberg Dollar Index is softer by 0.1%. Euro dollar at 1.13. And you can see a move just by 1 basis points higher for the German 10-year yield. Future stateside pointing to losses of 0.3% this President's Day, when the markets are closed. There is volatility, there is anxiety in these markets on the back of the geopolitics. Plenty more coming up. Stay with us. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
The U.S. has announced it's moving 8,500 more troops to Eastern Europe. If they're not being deployed to Ukraine specifically, why is that so important, and does that risk further provoking Russia?
Well, there's two things going on. So what the United States recently announced is that we are going to put 8,500 troops that are part of the NATO response force on high alert. That means they'll be ready to deploy on a moment's notice should we need those forces anywhere in Europe to protect NATO territory. In addition, the United States is also looking at possible additional moves that they might make to move U.S. force posture into Central and Eastern Europe. The reason we're looking at that is because a lot of the members in that neighborhood in Central and Eastern Europe feel concerned. And so we are looking at what measures we might take in the name of reassurance and deterrence.
Season continues.
To the Metaverse, to Spotify, to Qualcomm and beyond.
They're sinking big time.
You can't do better. Bloomberg breaks the numbers first.
PepsiCo has given a sales outlook that beat estimates.
It's Peloton.
Disney and Uber.
Pfizer also out with earnings.
An expert analysis you won't get anywhere else.
This is fascinating.
What is going wrong for Meta that is going right for Twitter?
How much runway is left? Peloton really becoming a proxy for this pandemic.
I think there's tremendous opportunity.
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
This is Bloomberg Markets. I'm Tom Mackenzie in London. Now, French Finance Minister Bruno Le Maire spoke earlier with Bloomberg's Francine Lacqua about France's role in easing Russian aggression. Take a listen.
Politics and geopolitics is really dominating, with a huge, forceful role that France is trying to play in trying to ease the tensions. First of all, Minister, what kind of impact would sanctions on Russia have on the French economy?
It would, first of all, have a very deep impact on Russia, on the Russian economy and on the Russian interest. But it's time for de-escalation. It's time for diplomacy. And there has been a major breakthrough last night, thanks to the efforts made by President Macron. There is the possibility of having a meeting between President Putin and President Biden. The two leaders agreed on the principle of a meeting. And I think that we should all make the best efforts to make this meeting a reality. Once again, President Macron played a key role to trigger this meeting between the two leaders.
So again, you put all the efforts diplomatically. If it doesn't work, what kind of sanctions should we be looking at?
I don't want to give too much details on the sanctions, because if we want the sanctions to be efficient, we have to trigger the sanctions when it's time to trigger the sanctions. But one point must be very clear. If there is any attack from Russia to Ukraine, we have a set of sanctions that are still available and that would hit the Russian people, the Russian state, and the Russian economic interest.
How long do you think these elevated prices for gas and oil will stay? And how much pain is it? If it's a year, how much more subsidies can you put in place?
I think that everybody must be aware that till there are some geopolitical tensions in Ukraine, and taking into account the fact that there is a very strong economic recovery in the United States, in Europe, everywhere in the world, which is quite good news for all of us, we will have to face an increase in energy prices.
That was French Finance Minister Bruno Le Maire speaking to Bloomberg's Francine Lacroix. Let's bring back in then James Athey, Aberdeen Investment Director. James, thanks for sticking around. I inadvertently cut you off before the break, but we want to get your calls on Europe. We want to get your calls on France, in fact. Give us an explanation. Why are you short France? The economy is ticking over. You've got, arguably, if you look at the polls, you've got political stability. They got the elections in April, but it looks like, according to the polls, that Macron is going to be re-elected. What don't you like about France?
Don't worry, Tom. You're not the first person to want to get rid of me quickly. Yeah, I mean, we're short the high beta names in Europe, full stop. You know, realistically, the main force which has kept European bond yields in check, which has really, in our opinion, retarded the market's ability to price the inherent risks appropriately, has been the ECB. And in the circumstances we're seeing at the moment and that we're expecting through most of the rest of this year, I think, the ability for the ECB to justify ongoing support via bond purchases and possibly even being forced into hiking rates. This is an environment that should re-inject risk premium back into some of these bond markets. And if you look at the sort of debt to GDP, debt dynamics, structural growth dynamics, political dynamics, and weigh those up against the additional yield that you achieve or that you earn by owning France relative to core market, relative to Germany or swaps, it really does seem like a particularly bad trade-off. So France, Italy and Spain, we believe are the weakest links in that chain. And we're happy to be short all three in various forms. Outright is definitely one of them because, first and foremost, this is definitely a higher yield environment as ECB is support is ebbing away.
Okay, James, what about to the idiosyncrasies of the UK, where the Bank of England has hiked a couple of times, expect to hike again in March, and yet UK equities have outperformed their US and European cousins? Does that continue?
Yeah, really that sort of central bank balance sheet expansion argument for equity performance is most obvious and most powerful in the US. You really don't observe the same dynamics anywhere else, really. I mean, going all the way back to the peak of equity markets in 2000, in the first quarter of 2000, the performance of European equity markets is negative since then. The performance of UK market is pretty much flat since then. Japan has eked out a 30% or so gain. And then you've got the US with roughly a 250% gain. And the chart that shows you FARBAST, which is the ticker for the Federal Reserve's balance sheet versus equities, makes it look like that's a very close correlation. Don't really observe the same in the UK. The reality is that FTSE 100 the makeup of the index has been one of the main reasons for that.
James Athey, we appreciate your insights. Aberdeen Investment Director, short France, Spain and Russia, and reminding us, in his view, the central banks still remain far behind the curve, certainly when it comes to the Fed. Okay, coming up, the $100 crowd gets bigger. We hear from the CEO of the world's largest independent oil trader about just how long it could stay in triple digits. That is next. This is Bloomberg.
Keeping you up to date with news from around the world with the First Word News, I'm Leanne Gerrans. The Kremlin is casting doubt on earlier statements from Washington, saying there are no concrete plans yet for a summit between Presidents Biden and Putin. France also reported a deal had been reached in principle for a meeting to ease tensions around Ukraine. Moscow has said it does not intend to invade Ukraine, but US officials say they have intelligence showing that Putin has already given the order. Over in New Zealand, Prime Minister Jacinda Ardern says she will start to ease COVID-19 restrictions after the current Omicron outbreak has peaked. That includes the removal of some vaccine mandates that are the main complaint of protesters occupying Parliament's grounds. Ardern said today that the government expects the wave of Omicron cases sweeping through the population to peak in 3 to 6 weeks. Alphabet's Google has reached a settlement for an undisclosed amount with a woman who said she faced discrimination by the search giant after she became pregnant. Chelsea Glasson sued Google in 2020 after she claimed her repeated efforts to report pregnancy discrimination were ignored. Google hasn't commented on the settlement. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg.
Omicron variant and the latest wave have an impact on not only consumer trends but your business? And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
A lot's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
This is Bloomberg Markets. I'm Tom Mackenzie. Let's check in on the markets then. 4.5 hours into the trading day here in Europe. US, of course, closed for President's Day. And you've seen a marked leg lower for European equities. They came out of the gate, actually, at 8 a.m. local time in the green. That has changed on the back of the geopolitics and the Kremlin coming out with a statement that is far more cautious on this apparent planned meeting between President Biden and President Putin, saying there are no concrete plans as yet. Currently, the Stock 600 is digesting that then, down 0.8%. Future stateside pointing to losses of 0.4 or 16 points. Euro-dollar is stronger by 0.2% at 113, and your German 10-year is just up by 1 basis point. Let's switch it on and see how things are playing out then for the Russian markets, because they've been hammered on the back of these geopolitical announcements. We're trying to read and pass the messaging out of the Kremlin and indeed out of Washington, and it was the French who tried to coordinate this meeting. Currently, Russian stocks down almost 6%, and the ruble also under pressure, down by close to 1%, closing in to 78.3 on the ruble. So that is the state of play in terms of the markets in Russia on the back of these geopolitics. And again, the future stateside pointing to losses of around 0.4%. Let's bring in then for a market analysis, Amy Kong, CIO and Portfolio Manager at Barrett Asset Management, which has $2.9 billion in assets under management. Amy, thank you for joining us this President's Day. How are you and the team at Barrett looking through these geopolitics? And is there still the case to be made that the focus has to be on fundamentals, that you look through the noise of these tensions?
Hi, Tom. Thank you for having me. I absolutely agree with your question. Just focusing on geopolitical events, in looking at the markets over the past several decades, we have seen over 20 geopolitical events impacting bull markets. And we've also found that these events and the market's reaction to these events tend to follow a very similar protocol, if you would, where there's an initial reaction, usually negative because of the uncertainty of the situation. And then in due time, the markets tend to digest whether or not these events impact the markets over the long term, impact fundamentals over the long term. And if the answer to that is really no, I think the markets tend to digest the information and move on, if you would. And really looking at the markets today, that's that initial reaction that we're experiencing right now. When I say in due time, it typically varies, but we have found that on average, that market reaction can last 1 to maybe a couple of weeks, if you would. And the market tends to come back to that pre-crisis level, typically, between that 30 to 60-day period. Of course, when we think about the situation today, the market is also being, pressured from the standpoint of very high inflation here in the United States, and of course, uncertainty over the Fed. So, those numbers that I just pointed out could fluctuate again because there's obviously a lot of other things impacting the market. To your second question, Amy, or the second part of your question, I think you're absolutely right. Yes, Tom.
No, I just wanted to jump in because I'm going to unpack some of that because it's important. And in terms of looking at the fundamentals, and we know there is the importance of focusing particularly on pricing power amongst these companies. The earnings have been relatively solid. But do you need to build in some contingencies, though, even as you look to the fundamentals? Are there certain hedges you need to be putting on in this environment?
For Barrett, we are not putting on those second derivative hedges. At this point, we continue to feel constructive on the U.S. equity market relative to cash as well as fixed income. We do find that the stock market tends to be, in the long run, a very good hedge against inflation, although there is volatility built in. And I think the hedge that you may be asking for us, it's more about asset allocation and not necessarily putting on, protection puts and things of that sort. For us, as we're managing money for a lot of individual clients, it's all about, can you afford this risk? Can you really have this kind of exposure in portfolios? And I think to us, that tends to be the better recipe in terms of managing through some of this risk. And really the key for us is fundamentals, knowing what you own. You mentioned pricing power. That is very key for us right now in terms of finding companies that can operate in this kind of environment, that can pass on the higher material costs and input costs to the end consumer, and making sure that they can pull, again, the operating leverage ratios to again, make sure that they can operate in this environment.
And part of that is going to be down to the strength of the US consumer. What is the data telling us about the resilience of households? We've been told time after time that they are sitting on healthy amounts of cash on aggregate. Does that continue to be supportive to these corporates? Are they still able to raise margins and pass that cost on, or is the consumer starting to fray?
Well, just looking at the past corporate earnings season, which we're kind of at the tail end of at this moment, I think companies have continued to be very strong in that regard, meaning being able to pass on that higher input costs, and profit margins did not get impacted during this last quarter. Now, it's hard to say how that folds out, or unfolds rather, for the remainder of this year. We are seeing that expenses as a group is now growing at double digits, and that's a concern for us. With regards to the consumer, I kind of think they are continuing to flex that muscle, that spending muscle. I think Americans, whether happy or unhappy, we continue to shop, and that's a great thing in this kind of environment. We have seen that retail sales continue to show strength in this choppy environment. In terms of the household balance sheet, that is still sitting on excess savings. Right now, we are seeing that those savings are still north of $2 trillion, and that's, again, a very good tailwind, if you would, in terms of thinking through retail spending over the course of the next couple of quarters. Certainly, consumer sentiment is low, but we are also seeing some offsets to that. For example, wage inflation, which is a very, very good barometer in terms of the health of the consumer, is now north of 4%, which I think is, again, a very good metric to rely on. So I would say I'm willing to bet that the consumer spending patterns that we've seen continues, albeit there could be some fluctuations, but certainly likely to move in a positive direction.
Okay, Amy Kong there, Barrett Asset Management CIO, thank you on the resilience of the US consumer and why she continues to favor US equities at this point. Thank you for your insights. Let's get to the question around energy then and oil, and a prolonged period of oil above $100 a barrel and a surge in energy demand in the second half of this year. Those are just some of the forecasts for the energy sector by Russell Hardy, the CEO of Vitol. That's the world's largest independent oil trader. We caught up with him on Friday, and here's more of what he had to say.
In our view, yes, we'll see, perhaps a prolonged period of 100 plus at some point in the next 6 to 9 months. It's very difficult to be precise about the exact timing, but demand is going to surge the second half of the year, provided there's no additional worries about the pandemic and provided travel resumes to something like normal.
Do we know what kind of prices destroy demand? We've seen prices higher than this, haven't we? Yeah. In not all that long.
I think you're right. 11, 12, 13, around about that time, we were 100, 110 range. So we have seen these prices before, but I think when that occurred in 11, 12, 13, we didn't have the coincidental sort of gas price and coal price explosion that we have today as well. So I think consumers are getting it from all angles, which is certainly not a good thing. And demand will at the margin be lost because the price elasticity is there. Clearly, as it gets expensive at the pump, people are going to do a little bit less driving.
We've mentioned a lot about how supply is tight. One thing that could change that, though, at least to some degree, is Iran, and whether conversations with Iran result in Iranian fuels coming back to markets, essentially. What is your expectation there? There does seem to be some expectation that's going to happen. It's going to happen this year.
Yeah, I think all the parties have been talking this week, in fact, and it sounds like there's an agreement beginning to form. There's clearly, it's been a long path to get here. So I think the market's assuming something will get done in the next few weeks, and probably the market needs that oil, right? And the second half of the year would benefit from that additional supply, just from a consumer's point of view, that the market will be a little bit more easier to balance. And I think most people have got that factored in for the second half of the year. Most people would expect an additional volume from Iran. Clearly, they're producing oil and they're consuming oil themselves today. So the extra supply that they could send out to the world would probably be about 1 million barrels.
Do you have any sense of how much sort of geopolitical premium there is in the oil price? From what we've discussed, supply and demand dynamics would suggest that oil prices stay elevated even without that geopolitical geopolitical risk premium? What would you assume would come out if we see these tensions ebb away?
I don't think the geopolitics specifically account for a huge, talking about the Russia-Ukraine conflict, I don't think that accounts for a huge amount of the price premium at the moment.
That was Russell Hardy, CEO of Vitol.
Hello traders, how are you doing today? Hope your trading day start good. That's Monday. I'm going to place an order to sell short euro. The price I'm looking to sell 113.50. 113.50. I'll put the price to sell. So you got the strategy 113.50. Here is the price I'm looking to sell. If you don't have a strategy, you need to get it from website company.co.uk. This is the place where you can get our strategy. Then you have to follow our trades and copy them, and then to see everything in the strategy, all explained how we trade. So follow my trades and make profit as well. Okay, guys, stay safe, and I'll speak to you later.
Around what was happening in Vienna, maybe getting closer, maybe the dial being moved and the needle being moved on attempts to get a resolution with Iran. It could see more oil put into the market, but some, I've read, are already priced this into the markets for the second half.
Yeah, I mean, clearly this is one of the big political unknowns that the market has to calculate, and it is one possible bearish counterbalance to the very bullish story that Russell was presenting there, is that we may get more Iranian oil. What the market isn't sure of how much oil is exporting right now. It's quite hard to track Iranian oil exports because some of them happen under the radar. And how much extra oil could they produce, could they deliver to the market? Is it up to 1 million? Is it more than 1 million? I think is a really important question for the market to understand. And we won't really know the answer until if and when there is some kind of new deal in Vienna.
Is $100 a barrel enough to get US shale production back?
Well, if you listen, last week we had a lot of the big US shale producers presenting their results. And the message from those publicly listed shale producers is that, no, they are fully on board on this new idea that they will maintain production discipline, that they will ensure maximum returns to shareholders. Shareholders, investors are punishing any listed shale company that says we're going to spend more money and increase production. The message from investors is very clear. That said, there are whole numbers of smaller shale producers who aren't listed and very big public companies like Exxon and Chevron who will increase production. It's just a question of how fast, and many people think, again, because of that discipline, it won't be quite fast enough to keep up with demand.
Okay, Will Kennedy, thank you for breaking down some of the key themes in these markets, with the CEO of Vitol coming out and predicting $100 per barrel. Currently 93.86, up 0.3% on your Brent. Coming up, British Prime Minister Boris Johnson set to end England's COVID restrictions today. We'll have an update after the break on where that leaves the UK amid the Live with COVID attempt and Live with COVID plan from the UK. Your markets across Europe currently lower by 0.9%. US futures pointing lower between 0.4 and 0.8%. Stay with us. This is Bloomberg.
exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
The company grows, there are more challenges. What do you worry about the most?
The market opportunity for us is enormous, and so our challenge is to continue innovating, driving, and pushing ourselves every single day to go after the most attractive profit pools in this incredible global beauty and wellness market.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Keeping you up to date with news from around the world with the First Word News, I'm Leanne Gerrans. The Kremlin is casting doubt on earlier statements from Washington, saying there are no concrete plans yet for a summit between Presidents Biden and Putin. France also reported a deal had been reached in principle for a meeting to ease tensions around Ukraine. Moscow has said it doesn't intend to invade Ukraine, but U.S. officials say they have intelligence showing that Putin has already given the order. Now, people are leaving Hong Kong in record numbers. Nearly 28,000 people left the city last week, the highest number since the Asian financial hub imposed strict quarantine measures at the start of the pandemic. That is according to government data. The recent surge in people crossing into mainland China underscores the city's fading appeal. Now, India's COVID-19 outbreak is easing, but that is not necessarily good news for the nation's clinical laboratories and testing manufacturers. Top operators Metropolis Healthcare and Dr. Layla Path Labs have each plummeted at least 30% this year. The decline picked up speed after their December quarter earnings trailed analysts' expectations. And more trouble for Credit Suisse. A new report says the bank managed accounts from clients involved in human rights abuses, corruption and drug trafficking. That's according to leaked data on more than 18,000 accounts that together held more than $100 billion. The New York Times says the data covers accounts opened as far back as the 1940s. Credit Suisse rejected the allegations and said they were largely historical. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Tom.
Okay, we have some additional lines crossing the terminal when it comes to Russia and Ukraine. This is from the Russian news agency IFX. Russian military prevented a border violation from Ukraine. Again, this is from IFX, the Russian news agency, also citing the Russian army's southern military district. Russia says that it killed 5 people who tried to violate the border. Again, from the Russian news agency IFX. We'll get you more when and if it comes through. But of course, the focus on the tensions on that border and, of course, the prospects of a meeting between Presidents Vladimir Putin and Joe Biden. The Kremlin had come out earlier this morning and suggested that it has not been set yet. So we're waiting for more details on that, clearly, as tensions at the border remain very elevated indeed. Okay, let's get back to the COVID-19 situation and Omicron. Just one day after it was revealed that the Queen here in the UK contracted COVID, UK Prime Minister Boris Johnson, well, he's announcing an end to England's COVID-19 regulations. For more, I'm joined by Bloomberg Intelligence's Sam Fazeli. Sam, I've heard different things from different people within the medical establishment here in the UK regarding these efforts by the administration of Boris Johnson to roll back essentially all of these restrictions. And we're waiting for the details on that later today. We're expecting them to come through later today. What is your take on whether or not we are indeed positioned here in the UK to be able to do this?
Yeah, hi, good morning, Tom. Good afternoon. So the issue here is a lot more to do with the reality as opposed to whether we're in the right place or not. If the UK was in a situation where, because of all the free at-home tests, etc., people were testing themselves, seeing they're positive, not necessarily reporting it, and then hopefully self-isolating, then the rule that requires self-isolation is probably not necessary. Guidance to self-isolate is probably the right thing to do. And also you're seeing a reduction in the number of cases, you're seeing a reduction in hospitalization, certainly deaths. So all the directionality of the signals suggests that it's probably the right thing to do right now. But I also never want to hear from any politician to say, that's it, it's done. Because this virus has shown us many times that it's never over until you absolutely know for 6, 9 months, 12 months, 18 months, 24 months, there is no more variants.
Sam, are you seeing any variants out there that are concerning you at this point?
No, I mean, we're going to have to keep an eye on BA2 because the same principle applies again. If it's more transmissible, even if its response to vaccines the same as BA1, this is the subvariant of Omicron, that means you're still going to have a larger number of cases, especially if you're completely taken all requirements away. Again, relying on people to do the right thing is one thing. If you're taking the requirements away, it's possible that you get another wave of infections, and that will be visible in the number of hospitalizations.
Okay, so keep watching that data as the UK prepares to remove the bulk of its restrictions, possibly as soon, at least that announcement, as soon as later today. Bloomberg Intelligence Sam Fazeli with the insights. Thank you for that. Meanwhile, Australia is reopening its borders. That's to double vaccinated visitors after almost 2 years of very strict travel bans. As of today, tourists who've received their vaccination boosters will be allowed to enter the country. Bloomberg's Paul Allen has more from Sydney.
It's been a little more than 700 days since Australia closed its borders to the world, and today they're open again to anybody who is double vaccinated and has the correct visas. They're allowed to now enter Australia without quarantine. Even those who are unvaccinated can enter Australia and only quarantine for 7 days in a hotel. So this is a big step forward. The first flight from Los Angeles today was QF12 under the new conditions, and there was a real party mood down here at Sydney Airport's arrivals terminal. Hasn't quite seen that much action for more than 2 years now, or just under 2 years. We saw the gifts being given away of some miniature jars of Vegemite, stuffed toys as well, and even the Trade, Tourism and Investment Minister Dan Tehan was joining in the festivities. He was in a fantastic mood. This is what he had to say.
Well, it's huge for Australia. 660,000 people employed in our tourism industry. Obviously, it's been a very difficult 2 years, but it's party central out here at Sydney Airport as borders. We've reopened fully to the rest of the world, and it's great news, and it's great to see the excitement. And I think it all goes well for our tourism industry, rebounding very, very strongly.
Well, Minister Tian also conceded that there were going to be some challenges around the reopening. Of course, you can never be quite certain what the coronavirus is going to do next, but he was confident that with Australia having vaccination rates well above 90%, that travellers could come here with certainty and not have to worry about getting trapped or conditions changing now. There is also going to be challenges for the tourism industry itself. While it can welcome back international tourists, it's been mothballed now for effectively 2 years, and with such a tight labour market, there's going to be some difficulties around attracting staff back and scaling up again. And then, of course, there are tourism markets as well. Not only do travellers have to be encouraged to make the long journey to Australia, but before the pandemic, Australia's biggest source of tourists was China. And, of course, the Australia-China relationship has soured somewhat since the pandemic began. So the Trade Minister, though, confident that all of that can change, even though here in Australia we still record new coronavirus cases of the Omicron variant in the thousands per day. The New South Wales Premier Dom Perrottet said earlier, well, this is what the new world looks like as we transition from pandemic to endemic. At Sydney Airport, I'm Paul Allen for Bloomberg.
And that was Bloomberg's Paul Allen from Sydney. Your markets here in Europe lower by more than 1% across the benchmark futures. Stateside pointing to losses of more than 0.6% on this President's Day. You've got to move higher in oil and you've got to move into German bonds on these geopolitical risks. Stay with us. This is Bloomberg.
almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 itu nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? combustion engines get electrified.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
It is 1 o'clock in London, 8 a.m. in New York, and 9 p.m. in Hong Kong. I'm Anna Edwards. Welcome to Bloomberg Markets, our top stories today. European stocks in the red as traders questioned the prospects for a diplomatic meeting between President Joe Biden and his Russian counterpart Vladimir Putin. We'll have the latest on the diplomatic efforts. Oil whipsawed as investors weigh the outlook for dialogue between the US and Russia. We will have the latest on those oil market moves. And British Prime Minister Boris Johnson set to put an end to England's COVID restrictions today. We'll hear from the Prime Minister in a few hours. First, let's check the markets for you. Welcome to this special program, everybody. This is Bloomberg Markets. It is President's Day over in the United States, which means we're without the US, but we have plenty of geopolitics that involves the US, of course, to talk about, and indeed plenty besides in markets today. So the Stocks Europe 600 down by just over 1%. We started the day in positive territory. There was talk that the Biden administration had said yes to a French proposed meeting between Putin and Biden. That talk didn't add to risk appetite for very long, though, as we didn't get much sounding from the Kremlin on that front. And then when we did hear from the Kremlin, they said that there were no concrete plans for the two to meet, and so we see the market moving to the downside. The CAC Heron down by 1.5%, just illustrating some of the weakness we're seeing across European equity markets. Very few stocks in positive territory, actually, over in France. We talked about what Brent crude is doing or what oil markets are doing with all of this geopolitics to the fore. This is lifting the oil price. We've seen it really whipsawed by those geopolitical lines, though. Earlier on, when we saw risk assets looking more attractive, we saw actually the oil price dropping. But now we see, with this tension ongoing between Ukraine and Russia, or on that border, we see Brent crude prices up by 0.5%. The euro clinging on to some of its earlier gains on dollar weakness. A little bit of dollar weakness still the case, although moving closer to the flat line as we go through this morning here in Europe. Let me just get to some breaking lines that have come through with what we're seeing in markets in mind. We have been waiting all day, or we were waiting for much of this morning here in the European time zone, for an update from the Kremlin on their perspective on whether Presidents Biden and Putin were going to meet. And we heard, as I said, from the Kremlin, there were no concrete plans. To get it to now, we're getting a little bit more detail on that from the foreign minister in Russia, Sergei Lavrov. He's saying that the West must say what a Putin-Biden summit would result in. Putin told Macron he needs to know what the possible summit outcomes would be. So this is according to the Russian foreign minister speaking in Moscow. And I mentioned this because this is clearly one of the big factors that is driving markets right now, geopolitical tension. Will this meeting take place between the presidents? Will we just have a meeting between foreign ministers, if you like? And that is certainly something we're watching for. Another big preoccupation, of course, in markets is around what's going on with the Fed. I've got one chart to show you this morning, just to make sure you understand we haven't lost sight of that particular conversation. A key obsession of markets, of course, around whether the Fed is going to tighten too much and then lead us into some kind of recession. Would the Fed do that? Well, we usually look at the 2s-10s Treasury spread. I've got here the 2-10s overnight swap curve, and this is looking out 1 year. So what do we know now, or what is being priced into markets about where the 2s-10s curve will be in a year? And the answer is that it will be inverted. And so this is another way of looking at that market assumption that perhaps the Fed is going to tighten too much and send the US economy into recession, even though we've heard a little bit less about the need for a 50 basis point hike from Fed officials. We will return to these Fed conversations as we go through this hour. Let's get back to the geopolitics, to our top story, and whether we will see a meeting between the presidents of Russia and the United States. Russia is backing off reported plans for a summit with the US, saying there's no concrete plans. And I just brought you those lines coming through from the foreign minister, Sergei Lavrov. It comes just hours after the US tentatively agreed For more, let's get to Bloomberg's Maria Tadeo in Brussels, where European foreign ministers are having their own meeting to discuss the way ahead here. Maria, good to see you today. So the latest lines then coming through from Sergei Lavrov, just as the Kremlin earlier did, sort of pouring cold water, or at least putting a pause on any plans we might have to mark in our calendars, mark in our diaries, a meeting between the presidents of the US and Russia.
Yes, and Anna, in weeks, there's one thing that I keep hearing, which is, of course, if there was to be a diplomatic resolution to this, it needs the big meeting. That is to say, the meeting between President Biden and Vladimir Putin. This is not something that Sergei Lavrov and Antony Blinken can fix by themselves this Thursday when they meet. Now, the Kremlin, as you point to, says that they need to know if they go into this meeting, what is it that they'll get out of it? They've also said and complained for weeks that none of Russia's security demands have been considered seriously by the United States. Now, in terms of whether this means the meeting is completely off the table, what I would say is, of course, officials today are telling me this is the way that Russians like to operate. They like to prep the ground with the foreign minister, take notes, perhaps test the waters, and then decide whether or not they want to engage into something bigger. Now, in terms of the meeting, however, that's happening here in Brussels, the conversation is now really shifting entirely into what to do with the sanctions. As you know, for weeks, the European Union and the U.S. have said we have this package that will be huge. It will really cripple the Russian economy, will be swift and severe. But the question now is when to trigger it. And today, Anna, we're seeing divisions, particularly from the Baltic countries or the Baltic nations that are saying Ukraine is a country that's being under attack in eastern Ukraine. It's also cyber hacked. What else will it take to decide that this is the right moment?
Okay, and interesting that we are seeing some spread widening around some of those Eastern European debt markets, Maria, as if the focus for the ECB might shift eastwards. Maybe that is the new frontier, the new periphery we need to think about. That's how the market is perceiving this. But where you are, where the foreign ministers are meeting, is there then a big division, East and West, a big division as to how tough these sanctions should come down?
Well, Anna, it's a very difficult question to answer because we don't know what the sanctions will look like. We don't know what's on the table. We don't know who would be targeted. We don't know whether or not it finally includes the Nord Stream 2 pipeline. The Germans say, to some extent, to cultivate this ambiguity, it scares the big Russian money. This is the right way to go ahead. But if you look at what the Ukrainian president said on Saturday, Zelensky, in a very impassioned speech that actually got a standing ovation at the Munich Security Conference, he said, we need the sanctions now, and we need them to be big. What good is it to sanction Russia once they invade our country? At that point, we're talking about war, and that is being echoed by countries like Latvia and Lithuania, who really say the position of Ukraine right now is very precarious. We know the economy is doing or is hurting in big ways just as a result of the tensions around it. We also know that the Russians have said they don't want to invade, but the intel from the United States points to something else. And at the same time, we are seeing a lot of cyber damage being done to Ukraine. So there are countries, particularly, as I said, the Baltics, that say we've seen this playbook before, we know how Russia operates, and it really is time now to trigger those sanctions.
Right, and other countries, no doubt, saying, you know, we need to keep the sanctions as something that act as a disincentive to attack Ukraine. We'll see where this goes. Maria, thank you very much. Maria Tadeo in Brussels. Let's take a market perspective on all of this. Niladri Mukherjee, Merrill and Bank of America private head of CIO portfolio strategy, joins us now. Really good to speak to you, Niladri. Then, when you're trying to put together strategies that last over a considerable time horizon, how much are you focused then on the day-to-day geopolitics? This is quickly becoming the main thought, I suppose, for market participants, whether we're going to see a coming together, whether we're going to see these meetings take place, or whether we're going to see actual war in Europe and an attack on Ukraine.
Well, Anna, as you know, it's very hard to create an investment strategy based on geopolitical events. Clearly, this is a big geopolitical risk, make no mistakes, and the markets are literally being held hostage at the moment. And from our perspective, if we do see an escalation, the biggest impact will first be in the energy markets. You'll probably see oil prices spike higher. You will probably begin to see growth estimates fall for many regions across the globe. And it really depends how long it lasts and what's the nature of this conflict. And you will see rising risk premiums across different asset classes. But what's interesting also is the primary driver of the markets, if you think about it over the next 12 months, is likely to be inflation and economic growth. And if there's higher pressure on inflation on the upside and downside pressure on growth, it just complicates the job of central bankers who are trying to bring inflation lower and keep the business cycle moving along. So it's a big risk, no doubt, but it's hard to really change your investment strategy in a dramatic fashion. I think you need to focus on staying balanced and staying in high quality investments.
Okay, I mean, does commodities seem like a good place to be then, Niladri, at this point then? If commodities are going to get pushed higher by the geopolitical tensions, and they might also be one of the few beneficiaries from a higher inflation environment, does that suggest that the commodity space remains strong?
We think so, not just because of the geopolitical tensions, but also fundamentally the outlook for commodities looks quite good. When you think about energy, as economic reopenings happen post the Omicron wave, as more and more demand comes through, you will see that upward pressure on energy prices as well. And supply, as we all know, is quite constrained. Here in the US, companies or shale companies are not drilling as much as they used to. They're all about capital discipline and returning capital to shareholders rather than putting more money into the ground. So there's the prospect of supply not being there as much as it being used to in previous years. And then obviously with the geopolitical situation, there could be an issue where supply is constrained from Russia into Europe as well. And as more and more countries reopen, that demand for energy will be there. So we expect commodity prices to stay elevated. And also, as you think about the growth of the middle class in Asian countries, that puts upward pressure on food prices as well. And pretty much across the board, whether it's energy or food or base materials, you see supply shortages coming through. And in an environment where nominal growth is running at 8-9%, that's a recipe for commodity prices do pretty well.
Okay, link for me, if you could, Niladri, the thinking around the Fed and this geopolitical risk, because it seems as if as there's more geopolitical risk, a lot of people say, well, maybe this stops the Fed from hiking 50 basis points if they were minded to do so in the first place, which is a talking point, of course, in March. But then if this turned out to be inflationary, could that then result in more requirement for hikes? Talk about the link between the two.
It certainly could, Anna, and that's the big risk, right, with respect to what's going on with Russia and Ukraine. I think it's unlikely that the Fed, by the way, will start with a 50 basis point hike. I think you've seen a little bit of pushback by some Fed speakers over the last couple of weeks on that front. The Fed rarely starts a hiking cycle with a big move like that. So it's likely to be that the Fed hikes by 25 basis points and then continues on the path to hiking. I know the market is pricing in something like 6 hikes. We're at 7 hikes. There's lots of other economists across the street who are calling for even more hikes. But it very much looks like we're in a different regime now. We've been in a regime where money supply growth has risen here in the US by about 40%. And it's still rising, by the way, with the Fed and the ECB putting more liquidity into the markets. But the regime now is of tightening financial conditions in an environment like that. And by the way, the Fed will also possibly shrink their balance sheets as well. So that has an unintended consequence on the financial markets, on risk premium. So it's a different environment for investors, and they will have to position differently going forward.
Niladri, thank you very much. Stay with us. Niladri Mukherjee, Merrill Lynch and Bank of America CIO and Head of Portfolio Strategy. Thanks so much for your thoughts so far. More from Niladri shortly. Coming up on the program, we'll turn our attention to China. Fears of a tech crackdown in China. They've been rattling markets for months. They continue to do so. It looks as if there's new legs to that story over the last 48 hours or so. We'll get to that conversation next with Bloomberg columnist Alex Webb, who'll be with us shortly. Meanwhile, here in London, European equity markets nearing the midpoint or at the midpoint of their trading day, and European equity markets trade substantially to the downside. This is Bloomberg.
what do you think is the impact of the Prime Minister on the market?
As Mr. Suzuki, who is the Financial Services Minister, he mentioned at his own press conference, and share buybacks is widely used to return profits to shareholders and improve ROE. And how to share out the profits from growth is, totally the decision of the management of each company after carefully taking, all the stakeholders into consideration. And I believe Mr. Kishida has a quite cautious stance on the uniform regulation of share buybacks. And I think because he is giving a consideration to each company's, individual circumstance and, decisions.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
How difficult was it to go to investors and say, invest, give money, put money into a travel tech company within this environment?
It wasn't that difficult because TravelPerk is doing much, much better than the rest of the industry. In fact, we are at the moment growing at 4 times revenue of pre-COVID numbers.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Earnings season continues.
To the metaverse, to Spotify, to Qualcomm and beyond.
Bloomberg is fastest with the numbers and analysis.
Peloton becoming a proxy for this pandemic.
I think there's tremendous opportunity.
Bloomberg, the fastest numbers and analysis you trust.
This is Bloomberg Markets. Welcome to this special program. It is, of course, a public holiday in the United States, but markets elsewhere still open. I'm Anna Edwards, live for you in London. Now, just past the lunchtime mark here in London. Let's talk about what's going on in China, though, because there's a big story over the last 24 hours. Concerns Beijing may roll out more restrictions for the tech sector weighed on Chinese markets overnight after a new policy on Friday to curb service fees for delivery companies. Alex Webb, Bloomberg Businessweek columnist and watcher of all things tech, joins us here on set in London. Alex, good to speak to you. So tell us the latest. How significant a step up? Because in some senses, we've been worried about Beijing and the government clamped down on tech stocks in China for many months now. What has happened in the last 48 hours or so?
I mean, it's basically a lot of hearsay. There were some unattributed posts on social media in China which suggested there was going to be a new clampdown coming. Tencent was pretty rapid to respond to that and say that's not going to happen. The account was shut down. But it came hot on the heels of some comments from regulators about the metaverse, about there being scams in the metaverse. Now, a company like Tencent, which is a gaming company, has invested in like Epic, for instance, which is a big sort of a pillar of the metaverse. A lot of people think if there's going to be a crackdown on metaverse stocks, that has risk for Tencent, and the stock was therefore punished.
Okay, and so the Tencent share price was in focus. We also saw Ant Group really in focus. People familiar with that story talking about how there's going to be increased scrutiny there. How much of that is that a focus for those watching tech in China?
Yeah, I mean, Ant Group is at the center of a lot of tech investments, basically. It's a holding company now, and it has stakes in a lot of other meaningful tech companies in the region, which means that if the regulators are looking at the links those companies have to Ant Group, and that is the most recent news, that is clearly a reason for concern. The thing that's quite interesting is if you look at the valuations, like Tencent is valued at about 27 times forward earnings. We're not anymore in this era of like tech stocks in China being massively overvalued compared to their US peers. It's pretty much in line. In fact, it trades at a discount to companies like Apple and Microsoft. It trades at a premium to the likes of Google and Facebook. People are getting very skittish about Chinese tech stocks, and that is already being reflected in their valuation.
Okay, thanks very much, Alex. Thanks for the update. Alex Webb of Bloomberg Business Week with his focus on technology for us. Let's talk about opportunities globally and the tech sector. Niladri Mukherjee still with us, Merrill Lynch and Bank of America CIO and Head of Portfolio Strategy. Let me ask you then, Niladri, about where you go looking for tech exposure, if at all. We've talked about all of the geopolitical tensions, which of course may give some people cause for concern, and indeed the Fed's trajectory giving some cause for concern when it comes to tech stocks in the United States. So you do go looking for bargains in China, or this latest news flow makes that less likely as well?
Well, Anna, it's less likely, I have to say, because China has made it very clear that they have the new common prosperity policy, which is really their governing philosophy, their economic philosophy right now. And they're going to continue down this path, likely, of putting pressure on their mega cap big companies, which have a lot of heft and they're strong in their own industries. They're going to put pressure on them to be a little bit more socially inclusive. And that just means that there's going to be downward pressure on their return on equities. And even if some parts of the market may start looking cheap, I think that valuation discount is warranted because of the fact that there is less transparency on their business models. Now, I have no doubt that China will do extremely well in the area of technology, and they believe in this concept of national champions, and these companies will thrive in the next 10 years. But it seems like in the very near term, there's some risks that one needs to be cautious on. I do think that the U.S. technology sector is becoming a little bit more attractive going forward after the recent sell-off.
Okay, that's interesting. So do we not know enough about common prosperity and what space there is there for profit making and for private business to get excited yet about where that leaves us? But tell us more then about what you see in the US tech space, Niladri. I mean, we sit here with geopolitics very much to the fore, and NASDAQ futures, they weren't open today, the NASDAQ, of course, but futures down 1.5%. What do you see in tech that excites you?
Well, whenever we think about forward-looking prospects for any kind of investments, you have to kind of look at where we are coming from. And over the last 10 years, technology has done extremely well compared to the broader market, and it's been earned because the profit situation in technology has been very good, and cash on balance sheets, et cetera, has been extremely good for technology. But also valuations are a little bit more stretched compared to the broader market. So the way I think about the technology sector is it still has very good fundamentals compared to the broader markets because the technology sector is leveraged to the digital transformation of the global economy, to future industries like artificial intelligence, robotics, automation, cloud, et cetera, et cetera. And so the earnings potential of technology stocks is extremely good going forward. But in the very near term, the market is trying to find a floor for valuations or relative valuations for technology, especially as interest rates are rising and financial conditions are tightening. But what I would say is investors have to pick their spot. Like if you look at areas within semiconductors, which, as you know, is a building block for every kind of device that we have in our pockets in our homes these days, I think that's interesting. And certain areas within software also make a lot of sense to me.
Niladri, thank you so much. Niladri Mukherjee, Merrill Lynch and Bank of America CIO and Head of Portfolio Strategy. Just as worth mentioning, technology, the worst performing sector here in Europe right now, down by 3.2%, just as we see a headline that tells me the Stocks Europe 600 index drops 1.5%, the lowest since October the 12th. Coming up, we go back to Brussels to get the view of how the Russian aggression is being viewed from neighboring Latvia with the country's foreign minister. The presence of Russian troops, I should say, on the Ukrainian border. How is that being viewed? This is Bloomberg.
Keeping you up to date with news from around the world with the First Word News, I'm Leanne Gerrans. Details are still emerging, but Russian forces say they have killed 5, quote, saboteurs and destroyed 2 armored personnel carriers of the Ukrainian forces who tried to violate the Russian border. That's according to Interfax, citing the Russian Army's Southern Military District. Interfax says the incident happened early this morning in Russia's Rostov region. No casualties were reported on the Russian side. Now, Boris Johnson still intends to end remaining virus restrictions here in England. The Prime Minister said it was time to see state mandates, pledging to lay out a plan this week for living with COVID. That is despite opposition from some public health experts as the UK continues to see tens of thousands of infections a day. Johnson's comments came hours before Queen Elizabeth tested positive for a mild case of COVID-19. China is telling the country's biggest state-owned firms and banks to start a fresh round of checks on their financial exposure and other links to Ant Group, renewing scrutiny of billionaire Jack Ma's financial empire. Multiple regulators have told institutions under their oversight to closely examine all exposure they had to Ant, its subsidiaries, and even its shareholders. Sources tell Bloomberg it's unclear what triggered the new scrutiny. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg.
Nuestro estudio, nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes. Según las modelizaciones, nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
The capital markets can really help the shift to sustainable and decarbonized global economy. What are you noticing in that as ESG is now the buzzword literally everywhere?
It is definitely the topic of conversation in most meetings I have with company CEOs, with investors, with industry groups. It's amazing.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
You can find opportunities in the tech space today, both in semis as well as in the software space.
David, thank you very much for your time. We appreciate it, especially on this public holiday. David Sowerby, Ancora Advisors, Managing Director and Portfolio Manager. Thank you very much for coming to talk to us. Now, let's get back to the geopolitics. As tensions continue to mount between Russia and Ukraine, bonds in the Eurozone's most eastern nations are carrying the brunt of the risk. Let's get back to Bloomberg's Maria Tadeo in Brussels, who is joined by the Latvian Foreign Minister. Maria, we're just showing a chart of European Eurozone peripheral spreads focused on the Eastern European side of things rather than the Southern European spreads that we focused on back in 2011. Take us to Eastern Europe then. Take us to that perspective on what is building, the pressure building on the Ukrainian border.
Yes, Anna, indeed. And we're actually going specifically to the Baltics because we're joined by, of course, Latvia's Foreign Minister, Edgars Rinkēvičs. Thank you so much for joining us on Bloomberg. You just had a meeting discussing, of course, the situation in Ukraine. The big question is when to trigger sanctions on Russia. In your opinion, is it now? Is it the time has come for sanctions?
Yes, indeed. I do believe that the time has come because of two reasons. The first reason is that we see that tensions in Donbass are growing. And frankly, I don't buy all the kind of propaganda that we are hearing from Russia about Ukrainians trying to invade Russia, shelling Russian border posts and so on. That's so bad that even Oscar ceremony wouldn't be good for those who are directing this kind of movie. Second reason is that Russian troops are still staying in Belarus past 20th of February, and we do not know when they are going to leave. So knowing how EU works from the procedural point of view, I do believe that we need to start not only talking, but also having the first procedural steps.
And you say what Russia is doing at the border is a propaganda operation, and you said like it's almost like a Hollywood movie, what they're trying to do. But I wonder...
Bad quality, actually. Hollywood is much better than
what the Russians are. And on that note, of course, but the situation on the Ukrainian border, it is very serious. And the big question is, what is an invasion? In 2022, how do we say an invasion has officially happened? In your view, has it already happened?
Well, it is happening as we speak.
It is happening.
Because I think that somehow people, I apologize for using so much movies today, but I think that people are still thinking that it's kind of World War II. Tanks rolling over, planes bombing and so on. Actually, what we are seeing currently could be a first step of the larger invasion, or could be already the operation that one could probably describe as incursion. So from that point of view, seeing that kind of activity, and if we are not stopping them now, not sending already the first signal through the sanctions, maybe we should not apply the whole package as we have discussed and we have prepared for the major invasion, but still we need to send this signal, and I do believe that in coming days we are going to see more intensity if we are not seeing also not only diplomatic efforts, which I applaud. I applaud what President Macron does, I applaud what American President Biden does and what Germany does and Chancellor Scholz does. But at the same time, you know, Russians do understand only the very strong message combined with diplomacy, not diplomacy and message coming sometimes later.
So you say it's time to speak the language of power. I do want to ask you, however, on Friday, there was this document circulated that Italy said we have to be careful when it comes to tackling the energy sector because this could be a big problem for us. Is that short-sighted, what Italy's doing?
Well, first of all, I never comment on any leaks here in the EU. This is a very complicated process of discussing things. But I do believe that we can have, at least for the time being, for the first kind of step or the first package, such things as technology transfers, export controls. Nord Stream 2 is something that, of course, my country has opposed for a long time and we continue to oppose. I don't think that we need to apply at this time the whole package that is in the making. But we need to make very clear that we are serious not only in our kind of statements. And, you know, unfortunately, sometimes we are very famous for gravely concerned or deeply concerned statements. This time, I do believe that we need to work out something more tangible. By the way, today we had also a very good discussion that I very much support, not only about sanctions, but also about having a Foreign Affairs Council meeting in Kiev. Such things also matter.
So you're going to Ukraine, you're making that clear, but I want to ask you, from now until Friday, do you expect that there could be a war? I know it's a difficult question to answer, but by Friday, is it still your base case scenario that we're not going to see full fighting?
Let me say this. I very much hope there is not going to be escalation or war. I very much hope that diplomacy is going to work, but we must be prepared for all eventualities. I cannot make any predictions. A politician who is making prediction can very easily lose his job, but this time I would say our hope is that diplomacy will prevail, that cool heads in Moscow will prevail, if there are any cool heads. But we need to be united. We are united, and we need to be not only united this time, but also showing a very strong resilience.
Well, Minister, thank you so much for joining us. Of course, that was Minister Rinkevic, the Foreign Minister of Latvia. And Anna, you know, it's the Baltic countries always say, and I've heard this repeatedly, trust us, we know how Russia operates.
Maria, thank you very much. Maria Tadeo in Brussels. Of course, Russia continues to say it has no plans to invade. There is considerable presence, though, of those Russian troops on the Ukrainian border. And as we heard there from the Latvian foreign minister, in the view of some Baltic nations, the time has come to sanction Russia rather than wait for any kind of invasion. Now, let's keep you up to date with the news from around the world. With the First Word News update, here's Leanne Gerrans. Good morning. Good afternoon, in fact, Leanne.
Good afternoon to you too, Anna. Details are still emerging, but Russian forces say they have killed 5, quote, saboteurs and destroyed 2 armored personnel carriers of the Ukrainian forces who tried to violate the Russian border. That's according to Interfax, citing the Russian Army's southern military district. Interfax says the incident happened early this morning in Russia's Rostov region. No casualties were reported on the Russian side. Meanwhile, the Kremlin is casting doubt on whether statements from Washington saying there are no concrete plans yet for a summit between Presidents Biden and Putin. France also reported a deal had been reached in principle for a meeting to ease tensions around Ukraine. Moscow has said it doesn't intend to invade Ukraine, but U.S. officials say they have intelligence showing that Putin has already given the order. Now, China's latest bid to gain control of soaring iron ore prices is a plan to make global suppliers negotiate sales to the world's biggest markets through a centralized platform. Bloomberg has learned Beijing wants all purchases of the steel-making material conducted through a single state-backed platform. The plan is part of a broader focus on boosting China's influence over the price of commodities. Alphabet's Google has reached a settlement for an undisclosed amount with a woman who said she faced discrimination by the search giant after she did become pregnant. Chelsea Glasson sued Google in 2020 after she claimed her repeated efforts to report pregnancy discrimination were ignored. Google hasn't commented on that settlement. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Anna.
Leanne, thank you very much. Leanne Gerrans with the First Word News update. Let's get back to commodity markets. A prolonged period of oil above $100 a barrel and a surge in energy demand in the second half of this year. Those are just some of the forecasts for the energy sector by Russell Hardy, CEO of Vitol, the world's largest independent oil trader. We caught up with him on Friday, and here's more of what he had to say.
In our view, yes, we'll see, perhaps a prolonged period of 100 plus at some point in the next 6 to 9 months. It's very difficult to be precise about the exact timing, but demand is going to surge the second half of the year, provided there's no additional worries about the pandemic and provided travel resumes to something like normal.
Do we know what kind of prices destroy demand? We've seen prices higher than this, haven't we?
Yeah.
In not all that long.
I think you're right. 11, 12, 13, around about that time, we were 100, 110 range. So we have seen these prices before, but I think when that occurred in 11, 12, 13, we didn't have the coincidental sort of gas price and coal price explosion that we have today as well. So I think consumers are getting it from all angles, which is certainly not a good thing. And demand will at the margin be lost because the price elasticity is there. Clearly, as it gets expensive at the pump, people are going to do a little bit less driving.
We've mentioned a lot about how supply is tight. One thing that could change that, though, at least to some degree is Iran, and whether conversations with Iran result in Iranian fuels coming back to markets, essentially. What is your expectation there? There does seem to be some expectation that's going to happen. It's going to happen this year.
Yeah, I think all the parties have been talking this week, in fact, and it sounds like there's an agreement beginning to form. There's clearly, it's been a long path to get here. So I think the market's assuming something will get done in the next few weeks, and probably the market needs that oil, right? And the view that the market will be a little bit more easier to balance. And I think most people have got that factored in for the second half of the year. Most people would expect an additional volume from Iran. Clearly, they're producing oil and they're consuming oil themselves today. So the extra supply that they could send out to the world would probably be about 1 million barrels.
Do you have any sense of how much sort of geopolitical premium there is in the oil price? From what we've discussed, supply and demand dynamics would suggest that oil prices stay elevated even without that geopolitical risk premium. What would you assume would come out if we see these tensions ebb away?
I don't think the geopolitics specifically account for a huge, talking about the Russia-Ukraine conflict, I don't think that accounts for a huge amount of the price premium at the moment.
That was the Vitol CEO, Russell Hardy, speaking to me at the end of last week. Here to discuss more, Bloomberg's Julian Lee. Julian, really good to have you with us. So we're talking about $100 oil there. We've already seen that in the physical market in some senses, but this is futures, 94.13 on Brent right now. I mean, $100 not all that far away, but he's suggesting that we'd stay there, that we'd go up there and stay there. What would be the driver? We've got geopolitics, but even without the geopolitics, are the fundamentals such that we will see oil above 100?
It certainly seems possible. I mean, the primary driver of this is recovering oil demand, and particularly recovering demand in the transport sector. I mean, we are seeing people coming back into the office. That is inevitably going to lead to more road traffic. As people come back into the office, I think we're starting to see people wanting to meet face-to-face again. So that means we may get a pickup in business flying as well. If restrictions continue to be relaxed as they are being at the moment, we're also likely to see a boost in leisure travel, particularly over the coming summer. All of those are going to push demand higher. And at the same time, we have the OPEC Plus producers who are being very, very cautious about how quickly they add supply back onto the market.
And one of the other key unknowns around supply is Iran. Yeah. What's the latest there? Because even on days where the geopolitics dominates other assets, the oil price does seem to be able to be moved by that story as well.
Certainly it is, and I think there's really very little clarity at the moment on precisely where the negotiations are with Iran. The Iranians clearly are very cautious about signing up to a deal that may only last as long as the current US presidency. They are very concerned that if there is a return, for example, of President Trump in 2024, this deal may disappear again as early as the beginning of 2025. They are very cautious about giving up the advances that they've made with their nuclear technology for a deal that will only last them for another 2 or 3 years.
One of the other things I talked to Russell Hardy about at Vitol was shale and the different role that shale is playing this time around, and capital discipline and other factors. There's actually a labour shortage causing them to not invest maybe in the way they have previously. Is that something we continue to see?
It certainly appears to be. I mean, there's a labour shortage. There's terrific cost inflation. I mean, the cost of sand for holding the fractures open is going up. The cost of labour when you can get it is going up. So there is cost inflation. That's nowhere near sort of making break-even prices get anywhere near the sort of current level of oil prices. But companies have adopted this financial discipline. Shareholders have come to expect it, and those companies that move against that fiscal discipline are being punished for it in their share price.
Julian, thank you so much. Thanks for your thoughts. Julian Lee joining us there with thoughts on oil markets. That is it for this hour of Bloomberg Markets. This is a special edition, of course, because it is President's Day in the United States. So no US markets to talk to you about, of course, today. But we do have European equity markets, of course, fully into their trading day. European equity markets feeling the pressure of the geopolitics right now, down by 1.5% on the stock 600. The FTSE, one of the better performers there, perhaps doing better as a result of some of its sector exposure. But the CAC 40 and the Xetra DAX down by more than 2%. So we're seeing substantial losses on some big markets here in Europe. And if we look at a sector breakdown, we can actually see that no sectors in Europe are in positive territory. Technology and autos and parts, they are the worst performing sectors, which are going to weigh on Paris and weigh on Frankfurt. That's the picture across European equity markets. Geopolitics very much to the fore. We'll continue to provide you with analysis of the latest twists and turns, the allegations and counter-allegations that come to us with regards to the Ukrainian border. We'll keep on top of all of that for you. I'm Anna Edwards in London. This is...
the Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. Earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
From New York City.
You're in London, in Sydney,
in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
So recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Live from London, I'm Anna Edwards. Welcome to Bloomberg Markets. Here are your top stories that we're following from around the world. We'll bring you the latest on the developing situation in Ukraine as the Kremlin says there are no concrete plans for a summit between Presidents Biden and Putin. We'll break down how geopolitical tensions are impacting market sentiment. Aaron Kennan, the CEO and co-founder of Clear Harbor Asset Management, joins us with his perspective. Plus, later this hour, we'll bring you the SpaceX Falcon 9 rocket launch live and discuss investing in space with Chad Anderson, Space Capital Managing Partner and Founder. Welcome to the program, everybody. Welcome to Bloomberg Markets. This is, of course, a special edition because it is a U.S. public holiday. It's just gone 2 o'clock here in London, 3 o'clock in parts of continental Europe. I know it's a lot earlier than that if you're in New York. Let's get through where we are on the European equity markets, though, right now, because geopolitics really in the driving seat today. Stocks Europe 600 down by 1.4%. No sectors in Europe in positive territory. Some major markets in Europe down by more than 2%. The CAC 40, the Xetra DAX, both of those down by more than 2%. The FTSE 100 fares a little bit better, down by 0.5%. US futures also taking a turn for the worse, down by 0.7% as we try to assess, try to get our heads around the state of geopolitical risk at this point. We actually had a better environment, I suppose, for risk-taking earlier on this morning. We heard talk of a French proposal that the two presidents of Russia and the US would get together for a meeting. The US delegation confirmed it was interested. The Russians then said there were no concrete plans to hold those talks. Then we heard from Sergei Lavrov, the Russian foreign minister, who said that they'd need to understand a little more about what the aims of that meeting were. And we're now just hearing some lines coming through from Vladimir Putin, which we'll get to now in our next conversation. Aaron Kennan, CEO of Clear Harbor Asset Management, joins us. Aaron, very nice to speak to you on this US public holiday. No holiday in the news flow, though, no holiday in the geopolitics. We're hearing from President Putin this hour. He's saying we should discuss separatist recognition today. Ukraine doesn't plan to fulfill its Minsk agreements. Of course, they're talking about recognition of Russian-backed separatists in parts of eastern Ukraine, the Donbass, and that region. Aaron, how impossible is it to ignore all of the geopolitics, with geopolitics seemingly guiding many assets at this point?
Well, thanks for having me. Over the long run, geopolitics tend to have less of an impact on markets. You know, looking back at currency crises, the 9/11 attacks, and the like. But, you know, clearly this does feed into the narrative that we're in the midst of a period of greater volatility that is not only monetary driven, i.e. higher interest rates, not only driven by the fact that we're seeing less fiscal stimulus here in the United States, is essentially evaporated after the massive amount that we witnessed in 2020 and 21. But of course, now this geopolitical uncertainty. At the end of the day, this shouldn't really be a great surprise. Vladimir Putin, after all, went into Georgia in 2008 under the pretext that he was trying to prevent genocide. This morning, we're hearing the same lines coming out of the Kremlin. And so I unfortunately think that this is still sort of simmering to the top rather than you know, sort of coming off the boil, which is very unfortunate for markets and, of course, for humanity.
Right, absolutely, and we don't lose sight of the humanitarian side of this. The Russian Foreign Minister Sergei Lavrov saying the West is not ready to discuss our core security demands. And we are going to see the foreign ministers meet, we understand, towards the end of this week. But whether we get the president's meeting is still very much an open question. Some of the rhetoric today, some of the lines coming out today, certainly from the Russian side, do sound as if they are upping the ante, as if they are not the risk is to the fore, I suppose. How do you think markets are positioned if we do actually see an invasion, Aaron? I mean, what kind of response would you expect to see in markets? How much of that is already priced in from what you've already said?
Well, on the one hand, this would be the most significant incursion since World War II that we've seen in Europe. And if it is, in fact, something that we do see where they try to move into not just the eastern flank of Ukraine, but Kiev. But markets are not going to like this across the board. Sure, there'll be a flight to quality on the fixed income side of things, I suspect. And so U.S. Treasuries would probably rally in price. We'd probably see a further continuation of the recent gold rally that we've noticed over the last couple of weeks. Equities would soften, but equities have been in a technical downtrend for several weeks, if not months already, where, yes, the mega caps are sort of preventing the equity market from moving into a full-blown correction period. But what we've seen is sort of that mid-cap and small-cap segment of the market really under significant pressure, where the NASDAQ is now down about 10% or so year to date. We have the Russell 2000 down 11% year to date. The advanced decline lines clearly look weak. And if you look at companies that are hitting 52-week lows, not highs, that's at an all-time high within the last several years. And so, certainly concern for caution here if you're a long-only equity investor without the ability to allocate to other asset classes.
Right, indeed. So a need for caution there. Aaron, of course, the other preoccupation of markets, away from the geopolitics, but perhaps linked, is just how much tightening we're going to see from the Federal Reserve this year and beyond. Do you think it's possible that we see tightening from the Federal Reserve that leaves equities, quote unquote, intact? You can define that as you like. But what kind of hiking cycle are you factoring in here, Aaron, and how will equities perform?
Well, if you look at the sort of consensus, I guess they're calling for a total of, I looked at Fed funds futures this morning, and it looks like the market is pricing in about a 200 basis point move over the next 18 months or so. And so that's maybe 6 to 7 rate hikes at 25 basis points apiece this year and a few more next year. I think that's a rather sort of bullish scenario, given not just the geopolitical uncertainty, but the prospect that inflation will start to come off nicely from the current sort of what I believe to be peak levels as supply chains normalize, but also growth. Growth is going to shift in a decelerating way quite dramatically in the back half of this year as we see things playing out. And so if growth last year was about 5.5%, we could see full year growth this year at 3%, with the last quarter looking even less rosy than that. And so, I don't think slow growth is necessarily low equities, but in a higher volatility environment, it's very difficult for price to earning multiples to expand. And so our ultimate view on the Fed is that they're going to move less than 200 basis points. I don't know how much less, and I don't know how much, to some extent that they make a mistake and move 200 basis points. Like they did in 2018, where they moved and had to sort of backpedal. It wouldn't surprise me if we saw some of that occurring. But I think the Fed's going to prove a bit more dovish in March than the market perhaps thinks, 25 basis points and not 50, as they start to see some initial indications of inflation decelerating.
Okay, and of course, things could change very much as we head into the second half of the year then, Aaron. I mean, what are the chances for you that, not to echo too much the words of Team Transitory, but what are the chances that inflation does start to subside? Of course, some of the difficulty is some of the Chinese COVID policy and indeed some of the geopolitics all have inflationary dynamics to them, not the opposite.
Yes, there are a lot of cross currents for sure right now, Anna. I think here in the U.S., we've had higher inflation than even in Europe, although Europe has certainly had it as well. But the uncertainties around geopolitics certainly have some impact on some components of the supply chain, particularly, I suppose, agriculture. But Ukraine is not a huge manufacturing base, and neither is Russia, and so less concern on the margin there. But the sort of trickle-down impact of perhaps an energy crisis in Europe due to a longer-term incursion in Ukraine is really something that we're keeping at the forefront of our thought process, and we're monitoring that very closely.
Aaron, thank you so much for your time. Aaron Kennan, CEO of Clear Harbor Asset Management. Thank you very much for joining us. Just to bring you up to date with the headlines that come thick and fast when it comes to the Ukraine situation. We're hearing from the Ukrainian military, Russia's border violation claims are fake. So this in the context of Russia suggesting there'd been incursions over the border. We've heard claim and counterclaim from both sides on this front over recent weeks. Of course, we're also hearing more from Sergei Lavrov. You see him speaking there, the Russian foreign minister, saying the U.S. U.S. is trying to cherry pick from Russia's security proposals. He previously said that he wants to hear more about what a meeting between President Putin, you see there, and President Biden would mean before agreeing to that one should take place. Lavrov also saying today diplomatic efforts with the U.S. should continue. So that may be one of the more conciliatory lines coming out from Russia today on a day where we've also heard from President Putin. He said we should discuss separatist recognition, this in the context of the Donbass. And also President Putin said Ukraine joining NATO would raise threat to Russia. So plenty of news lines coming through. We'll continue to keep you up to date. This is Bloomberg.
has announced it's moving 8,500 more troops to Eastern Europe. If they're not being deployed to Ukraine specifically, why is that so important, and does that risk further provoking Russia?
Well, there's two things going on. So what the United States recently announced is that we are going to put 8,500 troops that are part of the NATO response force on high alert. That means they'll be ready to deploy on a moment's notice should we need those forces anywhere in Europe to protect NATO territory. In addition, the United States is also looking at possible additional moves that they might make to move U.S. force posture into Central and Eastern Europe. The reason we're looking at that is because a lot of the members in that neighborhood in Central and Eastern Europe feel concerned. And so we are looking at what measures we might take in the name of reassurance and deterrence.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
I think what we've seen during this period of time is that communicating via video is not a fad, that we are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Earnings season continues.
To the metaverse, to Spotify, to Qualcomm and beyond.
Bloomberg is fastest with the numbers and analysis.
Peloton becoming a proxy for this pandemic.
I think there's a tremendous opportunity.
Bloomberg, the fastest numbers and analysis you trust.
Welcome back to Bloomberg Markets on this special edition. I'm Anna Edwards, live from London. Let's check in on the Bloomberg First Word News, get an update on the top stories we're covering this morning. Here in London is Angel Feliciano. Angel.
Anna, the Kremlin is casting doubt on earlier statements from Washington, saying there are, quote, no concrete plans yet for a summit between Presidents Biden and Putin. France had also reported a deal that had been reached in principle for a meeting to ease tensions around Ukraine. Moscow has said it doesn't intend to invade Ukraine, but U.S. officials say they have intelligence showing that Putin has already given the order. Lavrov is speaking right now and just said the plan to meet with Blinken is set for February 24th. People are leaving Hong Kong in record numbers. Nearly 28,000 people left the city last week, the highest number since the Asian financial hub imposed strict quarantine measures at the start of the pandemic. That's according to government data. The recent surge in people crossing into mainland China underscores the city's fading appeal. And Deutsche Bank is warning its employees not to delete WhatsApp messages from their phones. It's part of efforts by the German lender to clamp down on private communication channels amid a U.S. crackdown. In December, U.S. authorities imposed $200 million in fines on J.P. Morgan Chase for staff's use of WhatsApp and other private email accounts. Global news 24 hours a day, on air and on Bloomberg Quick Take. powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Angel Feliciano. This is Bloomberg. Anna.
Angel, thank you very much. Let's get an update then, a briefing on the latest on Ukraine. Plenty of headlines coming through from the Russian perspective today. Let's go to Bloomberg's Henry Mayer, who joins us now from Moscow. Henry, very good to have you with us and your analysis. We are seeing live pictures of the Russian foreign minister and the Russian president, and plenty of news lines coming through. Sergei Lavrov saying we'll continue to pursue NATO eastward expansion halt, giving a date for the meeting with Blinken on February the 24th, saying that talks should continue, but there's a flurry of communication coming across. What stood out to you?
Well, look, I mean, I think, Anna, we're reaching the sort of climax, if you like, of this crisis. It's been building up since November. And, you know, what we have is, you know, Russia has these extremely sweeping security demands that it's been making. And until now, it has not received, you know, assurances that it will get those demands. So it's clearly increasing the pressure, you know, every day. I mean, now you have the possibility that Russia could recognize these breakaway areas in Ukraine. So, you know, the diplomacy is continuing, but against a backdrop of, you know, increasing threats from Russia.
It seems as if Russia is looking for a change in the position from the United States, and without getting a sense that that's really happening, they are unlikely, or seems from what we're hearing today, less likely to agree to a summit between Biden and Putin. I say this because President Putin has said that Macron says the US position in the talks has changed, but Macron couldn't specify any change in the US position. Russia clearly holding out for some kind of change in the US arguments.
Definitely. I mean, you know, what they're looking for, as we know, is, you know, some kind of iron-cast guarantee that Ukraine is not going to get into NATO. And, you know, whether that comes from Ukraine's position shifting or something that NATO does, you know, that's something that they're willing to accept. But, you know, we have no indication that either of, you know, NATO or Ukraine are willing to provide that assurance. And secondly, of course, they want to see movement on the Minsk agreements, which, you know, currently have not been fully implemented. And, you know, those two things are very, very difficult questions, but clearly Russia is at the moment determined to try and, you know, put as much pressure as it can on the US and its allies and on Ukraine to give in.
We see claim and counterclaim about what is taking place at the Ukrainian border, and a breaking of the ceasefire and breaking of the truce seems to be something that does happen on quite a regular basis, but there's a big focus on it today, of course. We heard earlier from Russian news agency, I think, that Donbass separatists have asked Russia for cooperation and they want to be recognized. Previously, President Putin had suggested that this wasn't going to happen, I think, in the short term. Bring us up to date on the role of recognition of Russian separatists in the Donbass.
Well, I mean, look, we've seen this happen before in Georgia in 2018 when there was a war that took place and, you know, Russia recognized separatist regions there. This has been used before, so clearly it's brandishing as a threat. You are right that so far the Russians have, you know, indicated that they won't go ahead with this for now. We'll see what the outcome of today's meeting is. You know, they're discussing it as we speak. It's very hard to make forecasts, Anna, in this situation. Everything is so fast moving. But, you know, the indications are still that this is a threat, you know, rather than something they will actually implement.
Is there any, you started this conversation, Henry, by talking about how we seem to be getting to the culmination, to some sort of climax, things moving very, very quickly. What are the next news? We look for a meeting between, of course, the foreign ministers taking place on Thursday. We now have a date for that, the 24th. Other than that, the big question remains whether we'll see a meeting between the two presidents.
Well, I mean, that meeting between Blinken and Lavrov is precisely intended to pave the way for a presidential summit. The presidential summit would be, you know, the opportunity for a deal to be struck. I mean, that would be the final phase in this. So, you know, we are getting pretty close to a situation where we either manage to resolve this crisis or it could spin out of control.
Okay, we're looking live at pictures of the Donbass negotiator, the Russian chief Donbass negotiator, Kozak, speaking at this Security Council meeting. You'll see pictures of Sergei Lavrov there, and of course, President Putin will continue to monitor. Henry Mayer, thank you for bringing us the latest from Moscow. Coming up on the program, my conversation with the Vitol CEO, Russell Hardy. We talk about where oil prices get to. He, in the wider conversation, also weighs in on shale, the role of shale, and Iran. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Live from London, I'm Anna Edwards. Welcome to Bloomberg Markets. This is a special edition, of course, because of the US public holiday. Now, escalating Russia-Ukraine tensions have pushed oil close to $100 per barrel. I spoke exclusively with the Vitol CEO, Russell Hardy, to discuss the possibility of oil pushing higher from here.
We actually touched 100 on dated Brent on Monday, I think it was. So it's not a new phenomenon. And you know, when you look at the supply and demand factors that have been affecting the market for the last couple of years since the pandemic, demand's recovered now to about the level we were pre-pandemic, and is going to exceed the level we were pre-pandemic in the back half of 22 and into 23. So supply needs to catch up, and I think what the market's worried about is how much supply there is going to be available in the second half of the year and going into 23. So in our view, yes, we'll see, you know, perhaps a prolonged period of 100 plus at some point in the next 6 to 9 months. You know, it's very difficult to be precise about the exact timing, but demand is going to surge the second half of the year, you know, provided there's no additional worries about the pandemic and provided travel resumes to something like normal.
Are you expecting the supply situation to remain pretty constrained? Because we have incredible backwardation in the markets right now. Is that going to be something that persists?
It should persist, yes. OPEC, as you'll know, is ratcheting up at 300 to 400 per month, according to their OPEC Plus agreement. So more supply is coming, but eventually we're going to run out of spare capacity, and that's what the market's trying to work out, how worried to be about that scenario. And you know, one of the short-term solvers is US shale. And US shale clearly is increasing in production, but it's not increasing as fast as it did in 2014, 2015, 2016. There's a lot more capital discipline. There's a lot less general capital available to throw at the shale industry. So it doesn't look like it's got the capacity to grow as fast as it did in 14, 15.
Do we know what kind of prices destroy demand? we've seen prices higher than this, haven't we?
Yes.
Not all that long ago.
Yeah, I think you're right. 11, 12, 13, around about that time, we were 100, 110 range. So we have seen these prices before, but I think when that occurred in 11, 12, 13, we didn't have the coincidental sort of gas price and coal price explosion that we have today as well. So I think consumers are getting it from all angles, which is certainly not a good thing. And demand will at the margin be lost because the price elasticity is there. Clearly, as it gets expensive at the pump, people are going to do a little bit less driving.
We've mentioned a lot about how supply is tight. One thing that could change that, though, at least to some degree, is Iran, and whether conversations with Iran result in Iranian fuels coming back to markets, essentially. What is your expectation there? There does seem to be some expectation that's going to happen. It's going to happen this year.
Yeah, I think all the parties have been talking this week, in fact, and it sounds like there's an agreement beginning to form. There's clearly, it's been a long path to get here. So I think the market's assuming something will get done in the next few weeks, and probably the market needs that oil, right? And the second half of the year would benefit from that additional supply. Just from a consumer's point of view, that the market will be a little bit more easier to balance. And I think most people have got that factored in for the second half of the year. Most people would expect an additional volume from Iran. Clearly, they're producing oil and they're consuming oil themselves today. So the extra supply that they could send out to the world would probably be about 1 million barrels.
Do you have any sense of how much sort of geopolitical premium there is in the oil price? From what we've discussed, supply and demand dynamics would suggest that oil prices stay elevated even without that geopolitical risk premium. What would you assume would come out if we see these tensions ebb away?
I don't think the geopolitics specifically account for a huge, talking about the Russia-Ukraine conflict, I don't think that accounts for a huge amount of the price premium at the moment.
That was my conversation there with the Vitol CEO, Russell Hardy. We are continuing to watch all of the latest lines coming to us from that press conference taking place in Russia, or that discussion taking place, I should say, the Russian president and his foreign minister. This is Bloomberg.
Energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. It holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Access the financial world on demand. Hear from leading economists, policymakers, industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Welcome back to the program. Let's get an up-to-date picture on the first word news stories that we are covering this morning. Let's get straight to Angel this afternoon, here in European time. Let's get to Angel Feliciano. Angel.
And Russian President Vladimir Putin says the situation in Ukraine's Donbas region is being discussed at today's meeting of his Security Council. Putin also said Ukraine doesn't plan to fulfill the Minsk Accord agreements. Meanwhile, Russia's Foreign Minister Sergei Lavrov says the West isn't ready to discuss Russia's core security concerns, but that diplomatic efforts with the U.S. should continue. In New Zealand, Prime Minister Jacinda Ardern says she will start to ease COVID-19 restrictions after the current Omicron outbreak has peaked. That includes the removal of some vaccine mandates that are the main complaint of protesters occupying Parliament's grounds. Ardern said today the government expects the wave of Omicron cases sweeping through the population to peak in 3 to 6 weeks. Now, UK Prime Minister Boris Johnson still intends to end remaining virus restrictions in England. He said it was time to cease state mandates, pledging to lay out a plan this week for living with COVID. That's despite opposition from some public health experts, as the UK continues to see tens of thousands of infections a day. Johnson's comments came hours before Queen Elizabeth tested positive for a mild case of COVID-19. And China is telling the country's biggest state-owned firms and banks to start a fresh round of checks on their financial exposure and other links to Ant Group, renewing scrutiny of billionaire Jack Ma's financial empire. Multiple regulators recently told institutions under their oversight to closely examine all exposure they had to Ant, its subsidiaries, and even its shareholders. Sources tell Bloomberg it's unclear what triggered the new scrutiny. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Angel Feliciano. This is Bloomberg. Anna.
Angel, thank you. It's just one day after it was revealed that the Queen contracted COVID, UK Prime Minister Boris Johnson is expected to announce an end to England's virus restrictions. UK trade unions, though, are challenging the plans, saying the Prime Minister should put public health first. For the latest on this and other news lines we're focused on when it comes to fighting the virus, Bloomberg Intelligence Sam Fazeli joins us now. Sam, very nice to speak to you as ever. So the UK reopening plan in the context of other steps towards normalization or steps towards trying to live with the virus, quote unquote. We're seeing that in other places as well, but the UK centre stage, I suppose, because the news flow is expected to come this afternoon. What do you make of the UK's reopening plans?
Yeah, hi, Anna. So when you look at the numbers in terms of cases, in terms of hospitalizations, ICU, deaths, they're all going in the right direction for this decision to be made. Am I in favor of telling people to stop wearing masks? As a rule, no. Am I in favor of telling people that they don't need to self-isolate if they are sick? No. But then the question here is, how much do you rely on people's common sense to knowing exactly what is at stake with this virus versus having a hard rule, which I'm not quite sure how you were enforcing anyway. So pragmatism perhaps is winning here, but we need to see these cases remain on the downward trend.
Well, I mean, the argument here in the UK is that we need to get to a point, and maybe the timing is the question here. Need to get to at some point a situation where you treat COVID very much like you treat other infections. If you don't feel well, you stay at home and you don't go out and you socialise. But then when you feel better, you get back to work. You don't have to wait to be tested to tell you can go back. I mean, Sam, but is that accepted as where we're trying to head to? It's just a question of when we're able to do that.
Yeah, but yes, I mean, exactly, Anna. The thing is that I think one thing we should have learned by now is that there's no hard and fast rules with this virus. So while things are looking great right now with this current variant, with vaccines, even though the variant is able to escape vaccines in terms of an infection, we seem to be able to be managing the severe outcomes. And that's the way that I think people are feeling positive right now. But we shouldn't assume that this is the end of the pandemic or the end of the problems here. COVID is not flu. COVID is not a common cold. So we should still be a bit humble with regards to that. Today, I think we can celebrate the downward trend of all these hospitalizations, cases, ICU, etc. But I don't think that means that it's over and it's finished and we're just back to normal.
And you've been following subvariants, Sam. What is the subvariant that we need to be concerned about and watchful for?
I think be watchful of, rather than concerned, is the BA2 subvariant. It doesn't seem to be escaping vaccines any more than the Omicron BA1 or other versions of it. It doesn't seem to be causing more severe disease. It does seem to be more transmissible. If it's 30–40% more transmissible than the already highly transmissible virus, and we have no restrictions, there is a risk that we see another taking off of cases when everybody is open and running around and without masks and not necessarily self-isolating, hoping that that won't be the case. If that's the case, we'll go back to a upward trend again.
And what do we know about Omicron and the way it interacts with the other variants, Sam, and the level of immunity we might get? I mean, many of us know people who've had Delta who then got Omicron, so we know that Delta infection doesn't stop you from getting Omicron. We hope that the vaccines we've all been taking are keeping the worst of the symptoms at bay. What do we know about how these various variants are evolving and what kind of immunity we get from having one against variants we've not yet seen?
Yeah, so I've seen data that suggests that if you've been infected with Omicron, you do have some immunity against other variants. The best situation seems to be in people who've been vaccinated, which is not a surprise because it's something we've been going on about for a long time. Your immune system has already seen something that looks like the virus. Now it sees the virus itself and therefore is very well trained to manage it and then mount a more evolved immune response, which I've seen in a study that was published recently, that in those cases where you have so-called hybrid immunity, you even have the ability to neutralize the old SARS, the first SARS virus. So that is good news. I wish that people didn't have to get to hybrid immunity, but to a degree that's probably inevitable for most people.
We're seeing reports that, from Wuhan, a place that will be forever synonymous with the virus, Sam, of course, and Wuhan saying they found 4 COVID cases, which by global standards sounds like not very many, but we know that China is managing this differently and has much lower levels of transmission up to this point. What do you think of the chances of China sticking to COVID zero or variations of COVID zero, which they have at the moment?
Yeah, well, Anna, so that's pretty tough. I mean, there's 4 cases. Let's be honest. We've probably had more than 4 cases in the past 10 minutes just in the United Kingdom, right? The issue with Omicron is how transmissible it is. The issue with Omicron is that you have high transmissibility while you have no symptoms. So it's the invisible virus. It was the case with other variants too, but this one is highly transmissible, and you have potentially 48, 72 hours during which you can be infecting people without knowing it. And then on top of that, a lot of the symptoms are like the common cold. So even when you have symptoms, you're not sure whether you have it. So that's the problem here. And then it infects a whole bunch of other hosts in outside humans. So I think it's going to be very tough to keep a lid on it. I'm in awe of how China has managed to do it so far. But let's hope they can manage to keep going without basically hampering their economy.
Sam, thank you very much. Bloomberg Intelligence. Sam Fazeli, thank you for joining us. Still to come on this program, we're looking for the launch of the SpaceX Falcon 9. We're looking at live pictures, in fact, of the preparations. It's set to deliver over 45 internet satellites into orbit. More on the launch and the future of SpaceX next. This is Bloomberg.
We know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccines specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Live from London, I'm Anna Edwards. Welcome to Bloomberg Markets. This is a special edition, of course, of Bloomberg Markets because it is a US public holiday. The geopolitical lines come thick and fast. We're just seeing reaction in the Russian stock exchange. The MOEX stock index falling 10%, the most since March 2020. We continue to keep you across those lines, but there are other stories to talk about today. And I wanted to alert you to an event outside of markets today. SpaceX is readying a Starlink mission launch. It is sending 46 internet satellites into orbit. This launch was delayed from yesterday when it was postponed due to weather. The launch is occurring at Cape Canaveral, Florida, in the United States. Joining us now to discuss this event and its broader significance, Bloomberg Intelligence Matt Bloxham and Chad Anderson, Space Capital, managing partner and founder and investor in all things space, including SpaceX, I understand. So thank you both for joining us. Matt, let me come to you first. What is the underlying, what is the importance of today, or put it in some context for us? This satellite delivery.
Yes, this is a Starlink launch, and so Starlink is SpaceX broadband internet system. So it should be a fairly routine launch. Obviously, the last launch in early February, they lost most of the satellites to a solar storm, so they're putting this one into a higher orbit to try and avoid those issues repeating themselves. But they're aiming to get to about 12,000 satellites over the next kind of few years. They've launched just over 2,000 so far. About 1,500 or 1,600 of those are kind of fully operational. So it's a kind of routine launch which improves the capability, capacity and coverage of the system.
Chad, your thoughts on the significance of what we're seeing today? Just another launch or something more?
Well, I mean, it's another step in towards getting the commercial service of their Starlink satellite system operational. This booster has flown 10 times before, so this will be the 11th time that this rocket booster has taken humans and cargo to orbit. So that's pretty important as well. And that's one of the reasons why SpaceX has such an advantage here, is because this booster has been depreciated to zero, many launches ago. And so they're essentially getting launching with zero marginal cost. So from a business perspective, it's very interesting. And we're going from satellite communications being a niche comms product, really accounting for 1% of global broadband, to up to a third in the next 3 to 5 years.
Chad,
so this is a big.
Let me just interrupt briefly because we're just getting to the countdown and the launch. We'll just listen in for a few moments.
Engines full power. Lift off. Starlink 4.8.
Falcon 9 has successfully lifted off from Space Launch Complex 40 at Cape Canaveral Space Force Station.
Power and telemetry nominal.
Carrying our stack of 46 Starlink satellites to low Earth orbit. Now, moments ago, we throttled down the engines, reducing the speed by decreasing the flow of fuel to the engine. That's in preparation for max Q, or maximum aerodynamic
Vehicle
pressure.
supersonic.
And we are coming up on max Q in a few seconds here.
Max Q.
And there's that call out that we've passed through max Q. Now, we do have 4 events coming up in quick succession. The first will be main engine cutoff, or MECO, stage separation, second engine start 1, or SES 1, and then fairing deploy. So main engine cutoff is where all 9 of the M1D engines shut down to slow the vehicle down in preparation for the next event, which is stage separation. And that is where the first stage separates from the second stage. Right after stage separation, the first stage will start making its way back to Earth for landing. And while we are able to land the first stage, both on land and at sea on our drone ship.
We will continue to monitor these pictures. We'll leave them up for you so you can see what we are talking about. Let's get back to our conversation then with Bloomberg Intelligence, Matt Bloxham and Chad Anderson. And we passed through max Q they were referring to there, the moments of peak mechanical stress on the rocket, but things are looking as if they're going smoothly. And from the commentary, Matt, we were just hearing from Chad about the number of times that this booster has been used already, and the reuse of equipment that sends satellites into space, or other deliveries into space. That must have been that's a big game changer in the last sort of decade or so, I suppose, in space.
Yeah, massively, and SpaceX have been at the forefront of that. You know, they really have transformed the business model of space, and others are following their footsteps. But you know, it's quite incredible to see those launches come back down to Earth and then quickly turned around to kind of reuse them again. And so I think probably over the next 5 to 10 years, we're going to see a complete transformation of the number of rockets going into space, what they're taking, how much it costs. So I think that the future is going to be quite exciting from a space perspective.
Okay, so Chad, coming back to you, so you made that point about the reuse of the boosters, which clearly helps the finances here. But Matt was also talking to us about how previously, or just some time ago, they'd seen a prior launch of satellites into space where they lost some of them, and so these ones are going to higher orbit. They're clearly a huge risks for the equipment, nonetheless, despite the trend towards reuse.
Well, launch is tricky, and you've got to check the weather report. Today, the launch window was instantaneous, meaning that if they didn't launch it at 9:44 Eastern time, then they weren't going to launch today. The event where they lost their satellites a couple of weeks ago, that was, that's a 3 Sigma event. They're fully aware of the risk, and they decided to take it. And I think that a lot of that has to do with the fact that they have lowered the marginal cost of launch, and also they're mass producing these satellites, and so they've brought the cost down of the satellite manufacturer as well. So because of the way that they approach business, because of their innovative business model, it allows them to take these kind of risks, which has put them in front of everyone else. I mean, just to put an exclamation point on what Matthew said, SpaceX is not only leading the charge here. Last year, they landed and reflown a booster 100 times, and they've done this before anyone else has done it even once. So no one is doing this. So SpaceX is clearly the apex player here in this category.
Okay, and Chad, tell us about the expectations, though, around Starship, because you've described how SpaceX is out front on this, but Starship has the potential to make that even more so, I suppose.
Yes, I mean, we're only speaking of space as an investment category because of SpaceX. 10 years ago, they fundamentally changed the economics of getting to orbit with their Falcon 9 rocket. And now with Starship coming online, this has the potential to have another step change. We're entering a new paradigm where this vehicle is the largest and it's fully reusable. So it can launch 1,100 metric cubic meters, 100 tons to low Earth orbit. So it can launch hundreds of these Starlink satellites, and the capabilities for this system are endless. It's going to unlock all types of new investment opportunities and new categories and new market segments. So this Starship is a very big deal, and we hope to see it fly this year.
Okay, that's your expectation then, Chad. Your expectation, Matt, around Starship and its significance.
Yeah, I completely agree with Chad. It really is a game changer again after Falcon 9. It's had a few hiccups in terms of development and in terms of the permissions it needs to get going. But yeah, as Chad said, we're hoping to see the first orbital test mission this year, and that will be really a launch pad for them, if you like, to kind of then take it on and start offering kind of commercial service, both for the Starlink program, but also for NASA and for third parties that want to get their equipment up into space and beyond.
Chad, how concerned are you about space collisions, whether that's with space, well, I assume that would be with space junk, but this gets talked about a lot. What's the talk in the industry about how this is tackled?
There's certainly a lot more activity today than there was in the past. I mean, the number of satellites that were launched in 2020 was 20 times more than a decade prior. There's something 3,000 to 4,000 satellites in orbit today, and that it's expected to grow anywhere between 50 and 100,000 in the next 10 years. So that's a lot more satellites and a lot more business being conducted in orbit. But there's 100 times more debris and objects in low Earth orbit than there are satellites. These are old satellites, rocket bodies, debris from collisions and weapons tests. And we're seeing more attention put on this. It was the key topic that came out of the G7 summit. But you know, space is big. The technology that we're using today is much better than what we've used previously. Leo Labs is a portfolio company of ours. They have a ground-based radar network that it's allowing us to track objects that are 2 centimeters in orbit, and it's feeding into SpaceX's Starlink operations, and it's feeding and powering their collision avoidance system. So the technology we're using today is a lot smarter than it was not too long ago.
It's a lot smarter, and I suppose there's a lot more focus on it if we are going to see private space stations being something that people want to go and visit, then getting a handle on space junk and the risks associated with it becomes even more of a priority.
It absolutely does, and you know, Starship is one of the capabilities that it has, because it's so large and because it's fully reusable. It has the potential to be a space station itself. And we know that they have these aspirations because they recently put in a bid for a NASA contract to do just that. So it's very interesting to think about a vehicle that's this large, and if it launches for just the cost of fuel, that's comparable with a single seat to the space station today. You can now launch an entire hotel.
Okay, and something else that's happening sort of at the frontier, I suppose, Chad, is moon missions, private commercial moon missions. What do you think will be the goals of those kinds of missions to start with?
So this is a big year for lunar transportation and moon missions as well. We're hoping to see 2 at least of the first commercial missions to the moon. These are part of the Artemis program, which are designed to get humans back onto the surface of the moon. But these missions today and over the next couple of years are really robotic precursor missions. It's to go and scout, to check out the terrain, understand, you know, where the water ice is, and to do experiments to see if we can harvest that water ice and split it into hydrogen and oxygen and make rocket and life support.
Yeah. Thank you so much for joining us. Thanks to Chad Anderson, Space Capital Managing Partner and Founder. Thanks to my colleague, Matthew Bloxham from Bloomberg Intelligence, who was with us a little bit earlier in that conversation as well. Now, staying in the family of companies tied to Elon Musk, Tesla faces a review in Germany over an autopilot feature. Bloomberg's Craig Trudell joins us with more on the story. Craig, good morning, good afternoon even here in London. What can you tell us then about this, this probe?
Yeah, so this is being done by the KBA, Germany's authority. Tesla actually has type approval with a different authority in Europe, in the Netherlands, and that's how they've gotten approval to put features like autopilot on the market in Europe. Notably, Europe has actually been a little bit more restrictive than in the US, where you actually have limitations in terms of what autopilot can do and what features they've made available here. But this is a matter of Germany actually sort of, you know, investigating whether one of the features that has been allowed, whether or not it's up to snuff for Europe. So this will be a matter for Germany and the Netherlands to work out, because obviously Tesla did not go to Germany for approval for this.
Right.
But it's yet another indication of greater scrutiny on autopilot.
And just briefly, Craig, so when are we looking at mass use of this kind of technology? What kind of time horizon?
We've seen autopilot on the market for some time. In terms of higher level functionality, I think it'll be longer here in Europe than in the US for functions like full self-driving, which is obviously controversial in the US already.
Okay, thank you very much. Thanks to Craig Trudell for taking us through that Tesla story. Let me get back to the markets and the geopolitics coming thick and fast today. So the Russian MOEX stock exchange falling 10%, the most since March 2020. Russian stocks, down, having their worst day since 2008, I should say now, down by 12%. So that's the focus in terms of the markets. Plenty of headlines coming through from the foreign minister of Russia, from President Putin himself. We'll keep you across these developments. This is Bloomberg.
Omicron variant and the latest wave have an impact on not only consumer trends, but your business? And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December, when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
Difficult was it to go to investors and say, invest, give money, put money into a travel tech company within this environment?
It wasn't that difficult because TravelPerk is doing much, much better than the rest of the industry. In fact, we are at the moment growing at 4 times revenue of pre-COVID numbers.
Live from London, I'm Anna Edwards. Welcome to Bloomberg Markets. Here are the top stories that we're following for you around the world. We'll bring you the latest on the developing situation in Ukraine, as the Kremlin says there are no concrete plans for a summit between Biden and Putin. We'll break down how geopolitical tensions are impacting market sentiment with Bernie Horn, Polaris Capital Management President and Portfolio Manager. Plus, we'll bring you the latest on lifting UK COVID restrictions as the standoff between Sunak and Javid delays the sign-off. Welcome to the program, everybody. It's just gone 3 o'clock here in London, just gone 10 a.m. over in New York. Special programming today, of course, because of the US public holiday. But European equity markets heading towards the end of the trading day, an hour and a half or so away from that. And with that in mind, let's check where we are on these markets. Down by 1.3% on the Stocks Europe 600, and no sectors in positive territory. Nervousness around the geopolitics. We've heard a lot from the Russian side today, a little bit from Ukraine as well. Little, of course, from the US because of the public holiday there and the time zones. But it's the Russian thinking that is working its way into markets, and there is some nervousness around that. We heard from the foreign minister of Russia, Sergei Lavrov. He was talking about how there is a need still to keep talking, and that meeting between him and Anthony Blinken will take place later on this week. But we don't know where that leaves any meeting of the presidents. That is the big unanswered question for markets right now. The CAC 40 down by just over 2%, just making the point that some of these markets in Europe, big markets in Europe, losing more than 2% in today's session. Let us get to Bernie Horn, Polaris Capital Management President and Portfolio Manager. Polaris has roughly $16.2 billion in assets under management. And Bernie, we appreciate your time with us today. So we're very focused on the geopolitics, of course, looking at these news lines coming through from Russia today. Impact on Russian assets very clear. We're down by more than 10% on the Russian stock market. Assuming a wider conversation than that, how much is this geopolitical story knocking your investments off track, Bernie? How are you managing to sort of make them stand up to the geopolitical threat?
Well, Anna, good morning from Boston. And by the way, we really think that some of this geopolitics is, some of it's real, some of it might be, the oldest page in the political playbook. When things aren't going well at home, you find an external force to focus everybody's attention on. But clearly the markets are down on the news. And, some of our equities, we actually have one equity in Russia. It's a diamond mining company called Alrosa. We think it's got great value. But I guess our view on it is that we just try to focus on companies that are generating a lot of good, strong cash flow. And as long as they can do that and raise prices and keep cash flows growing in real terms, the short-term volatility of these things will ultimately pass, and then we'll get back to focusing on real value.
Okay, that's interesting, Bernie, that you have some exposure then in the context of that Russian mining asset. Some people suggest that emerging markets might be a place that will show stress at a time of geopolitical tension, but others say, you need to be in commodities, and commodities might take you in an emerging markets direction. How are you playing the commodities story then, Bernie?
Well, we like to find low-cost producers. One of the things that we've always been cognizant of is that if you find a company that's a low-cost producer in a commodity, they will weather the downturns and the short-term cyclicality of prices. And so we really like those kinds of companies. We're a bit overweight commodities. I think we've got some concerns about the potential for slowdowns in the economy. There's a little bit of a risk to that. But on the other hand, we think that inflation starts at the commodity level. And we think if we are very careful and selective buying into assets and commodities where there's good, strong supply-demand balance in favor of the producers, that should really do us well. So for instance, we like copper. It's a green metal, and not just a patina on copper when it ages, but the greening of the world economy is going to really play into the hands of copper companies.
Okay, and you like copper, and Antofagasta springs to my mind because I'm going to be interviewing the CEO of Antofagasta later on this week, Bernie. So when you look at copper, you clearly see many reasons to be excited by that investment story. What does make you nervous about it, though, or what could stop that investment case coming to fruition? What should I keep in my mind as I get ready to talk to the CEO?
Well, the biggest problems with copper are that the assets are typically found in places in political environments which are not particularly favorable necessarily to capitalist production, and especially in Latin America these days with things going a little bit more toward the left politically. That's there's a lot of talk about taxes, more royalty taxes, more other taxes on these companies. And then of course you've always got the inevitable problems with supply disruptions. Mining is a difficult business, and when when you go into certain ore bodies, things don't go well.
Connection lost.
It's actually one of our portfolio holdings, along with Lundin Mining. but they both have, the challenges with respect to mining that ore. We think that that's one good question for them.
Okay, and so this search for places to hide out from inflation threats, Bernie, takes us into commodities, takes us down the supply chain into the, where the supply chain starts, I suppose, with some of these metals and mined materials. Where do we go on the inflation fight, though, from here? Because if we're thinking about how much pricing power all of these companies have, and all of the companies in the supply chain, how much pricing power they have, when do we get to a point where US consumers, and they are such a force still, say, no, we're not paying up anymore? Are you seeing any signs that the pricing power that the companies you invest in is going too far?
That's the $64 question, Anna, because we definitely know that there will be some demand destruction. I guess there are two forces in that regard. One is clearly when prices go up and people don't have enough income, they lose it to inflation, then you're going to have a problem with people not being able to afford certain things. On the other hand, we've still got an incredible amount of stimulus hanging around. If you look at the trillions of dollars that went into people's pockets the last couple of years, there are the banks still have close to $1 trillion of excess liquidity in the form of these stimulus checks that are just sitting in bank accounts. Ultimately, it's going to the Federal Reserve. It's on their balance sheet as bank deposits from banks. And so, that money, could ultimately be spent. Either that or it's going to be taken away in higher taxes to pay back for, for all the spending. But, we do think that there's going to be some reasonably good growth going forward, but you have to be really careful and selective on finding companies that are going to be able to raise prices more than inflation, which we think is going to be here for for a little bit longer, for sure.
And Bernie, what do we learn from the 1970s example of fighting inflation that you think is important for us to think about now? Because there are, the parallels are not perfect and history doesn't necessarily repeat, but sometimes it rhymes. So what do we take from the 1970s inflation experience that informs us now?
I think, Fisher Black, one of my professors at the Sloan School, was fond of saying that inflation is what people think it is. So inflation expectations, I think, are high right now. We've been in the camp for the last decade or more that we were in a very deflationary environment based on the hundreds of meetings that we have with companies every year. Now, when we have those same meetings, they're no longer talking about fighting off input cost increases with cost savings programs and productivity enhancements and so forth. We talk to them now and we say, gee, what are you doing about all these cost increases? And they basically say, we're raising prices. And we've got a long way to go before we catch up with the last 6 to 12 months of price increases. So we think, that there's an embedded, latent set of cost increases that we're going to see throughout 2022 and possibly to 2023.
Okay. Bernie, thank you very much. Bernie Horn of Polaris Capital Management, thank you very much for your time. I just want to get to some lines coming out of the UK. This on the fight against COVID-19. The UK vaccine panel backing a spring COVID booster for the most vulnerable. So by that, they mean those aged over 75 and those who are care home residents. So the UK vaccine panel making a booster recommendation in a statement. So just bringing up to date the fight against COVID-19 here in the UK. Perhaps not a surprise that we are going to turn the rollout of vaccines, we're going to turn that to focusing on the most vulnerable here in the UK. It's just coming up to 10 minutes past 3 here in the UK, 9 minutes past, let's say, and 9 minutes past 10 in the morning over in New York. More on the markets, more on the geopolitics when we come back. This is Bloomberg.
has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Continues.
To the Metaverse, to Spotify, to Qualcomm and beyond.
Bloomberg is fastest with the numbers and analysis.
Peloton becoming a proxy for this pandemic.
I think there's tremendous opportunity.
Bloomberg, the fastest numbers and analysis you trust.
Welcome back to Bloomberg Markets. Now, keeping you up to date with news from around the world with your First Word News Update, here's Angel Feliciano. Angel.
And Russian President Vladimir Putin says he's considering an appeal for official recognition from separatists in East Ukraine. It's a move that would likely torpedo European mediated peace talks and further escalate tensions with the West. Russian state television showed a specially called Kremlin meeting of Putin's Security Council to discuss the issue just hours after the military said it had killed 5, quote, saboteurs and destroyed 2 Ukrainian armored personnel carriers that crashed into Russian territory. India's COVID-19 outbreak is easing, but that's not necessarily good news for the nation's clinical laboratories and testing manufacturers. Top operators Metropolis Healthcare and Dr. Lal Path Labs have each plummeted at least 30% this year. The decline picked up speed after their December quarter earnings trailed analysts' expectations. Deutsche Bank is warning its employees not to delete WhatsApp messages from their phones. It's part of efforts by the German lender to clamp down on private communication channels amid a U.S. crackdown. In December, U.S. authorities imposed $200 million in fines on J.P. Morgan Chase for staff's use of WhatsApp and other private email accounts. And Alphabet's Google has reached a settlement for an undisclosed amount with a woman who said she faced discrimination by the search giant after she became pregnant. Chelsea Glasson sued Google in 2020 after she claimed that her repeated efforts to report pregnancy discrimination were ignored. Google hasn't commented on the settlement. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna.
Angel, thank you very much. Angel Feliciano with your First Word News Update. And as Angel just mentioned, currently there is a specially called Kremlin meeting of Putin's Security Council taking place. We've been following the headlines for the past hour or so. President Putin saying he's considering an appeal for official recognition from separatists in East Ukraine. The headlines helping to send Russian stocks at one point to their lowest level since 2008. For the latest, we welcome in Bloomberg's Mark Champion. Mark, bring us up to date with what is happening here, because we're seeing this meeting taking place at the Russian Security Council. Headlines coming thick and fast from many different voices. Crucially, President Putin saying he's now considering recognition of separatists. Bring us up to date here, because this has been something that the Russian Duma had already voted on, wanted Putin to do, but he hasn't done it as yet. What's the significance of this?
It would be a decisive moment. Essentially, what this would do is to make irrelevant the Minsk peace accords that diplomacy has really been based around, the attempt to get implementation of the peace deals that were made in 2014-15. So, it would really change the game, because that would no longer be relevant. It would allow the Russians to claim that, these are now independent territories, and that, they can have their own relations with them. If they invite them in, if the Russian military in, they'd be entitled to go. This would be the Russian argument. And so it really does change the game in quite a number of ways. Most dangerously, the extent of those territories at the moment is not the extent that they claim. So they claim, about more than twice the amount of area that they now control. So it would open also the gateway to further fighting, but now with Russian troops on those territories.
Okay, and as you're describing it there, Mark, and we're looking at these live pictures still coming through to us of the Russian Security Council meeting, I'm thinking of what we've heard from the US in recent days about Russia creating the pretext for invasion. From what you're hearing today, all of these different voices speaking in Russia, is that what the Russians are moving towards?
Well, they certainly wouldn't describe it as that. The Russians continue to say they have no plan to invade, but they said today that they had discovered and killed 5 saboteurs from Ukraine who crossed into Ukraine, into Russian territory, that they destroyed 2 armored personnel carriers that had crossed. And the Ukrainians say this is fake news, and indeed it would be, if it's true, it would be incredibly stupid of them to make this move for the first time, taking the war onto Russian territory, just as Russia has more than 100,000 troops assembled. So it would be extremely stupid. But, this is what the Russians say has happened. They're building a case to intervene. In what way they will intervene, we still don't know. And it may not be the full-blown attack on Kiev that the U.S. has been describing.
Okay, President Putin just saying the most recent headline crossing saying we're not discussing annexing separatist-controlled areas, which perhaps is interesting in that context. We earlier heard from another Russian voice saying that Ukraine's Zelensky won't fulfill the Minsk agreements. Ukraine would blame Russia for not sticking to the to the Minsk agreements. Where does this leave us then, Mark, as clearly the Minsk agreements, the diplomacy of years past, and we're heading into a week where we might see another flurry of diplomacy. Where do we stand on all of the diplomatic efforts that are currently underway?
Well, that's, both of these issues are very unclear at this given moment. So the Security Council meeting is going on. At the same time, the Americans, Biden has said that he's, very willing to have a meeting with Putin, another summit. This would be mediated by Emmanuel Macron of France. But the Russians have said that, no concrete date has been set for this. We want to first know what can be achieved. So, we don't know if there actually will be such a summit. And it may be that whatever comes out of the Security Council meeting will kind of decide whether it makes sense to have another stab at diplomacy.
Okay, Mark, thank you very much. Thanks for your analysis. Much appreciated. Bloomberg's Mark Champion joining us with analysis of the geopolitics. Turning now to the economic reopening post-COVID. Can we be post-COVID? But Australia is opening its borders to double-vaccinated visitors after a 2-year travel ban. Bloomberg's Paul Allen has the details as passengers arrive from Sydney Airport.
It's been a little more than 700 days since Australia closed its borders to the world, and today they're open again to anybody who is double vaccinated and has the correct visas. They're allowed to now enter Australia without quarantine. Even those who are unvaccinated can enter Australia and only quarantine for 7 days in a hotel. So this is a big step forward. The first flight from Los Angeles today was QF12 under the new conditions, and there was a real party mood down here at Sydney Airport's arrivals terminal. Hasn't quite seen that much action for more than 2 years now, or just under 2 years. We saw the gifts being given away of some miniature jars of Vegemite, stuffed toys as well, and even the Trade, Tourism and Investment Minister Dan Tehan was joining in the festivities. He was in a fantastic mood. This is what he had to say.
Well, it's huge for Australia. 660,000 people employed in our tourism industry. Obviously, it's been a very difficult 2 years, but it's party central out here at Sydney Airport as we've reopened fully to the rest of the world, and it's great news, and it's great to see the excitement, and I think it all goes well for our tourism industry rebounding very, very strongly.
Well, Minister Tehan also conceded that there were going to be some challenges around the reopening. Of course, you can never be quite certain what the coronavirus is going to do next, but he was confident that with Australia having vaccination rates well above 90%, that travellers could come here with certainty and not have to worry about getting trapped or conditions changing now. There is also going to be challenges for the tourism industry itself. While it can welcome back international tourists, it's been mothballed now for effectively 2 years, and with such a tight labour market, there's going to be some difficulties around attracting staff back and scaling up again. And And then, of course, there are tourism markets as well. Not only do travellers have to be encouraged to make the long journey to Australia, but before the pandemic, Australia's biggest source of tourists was China. And, of course, the Australia-China relationship has soured somewhat since the pandemic began. So the Trade Minister, though, confident that all of that can change, even though here in Australia we still record new coronavirus cases of the Omicron variant in the thousands per day. The New South Wales Premier Dom Perrottet said earlier, well, this is what the new world looks like as we transition from pandemic to endemic. At Sydney Airport, I'm Paul Allen for Bloomberg.
And our thanks to Bloomberg's Paul Allen for filing that report from Sydney Airport, of course. Coming up on the programme, we hear from the French Economy Minister, Bruno Le Maire. He'll be talking geopolitics, sanctions and energy prices. Geopolitics not far from that conversation then. That interview next. This is Bloomberg.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. You know, there's a huge mismatch in supply and demand. Prices are high. You know, prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Live from London, I'm Anna Edwards. Welcome to Bloomberg Markets. Now, as Russia-Ukraine tensions continue to intensify, the French Economy Minister, Bruno Le Maire, sits down with Bloomberg's Francine Lacroix to talk politics, sanctions and energy prices.
Politics and geopolitics is really dominating, with a huge, forceful role that France is trying to play in trying to ease the tensions. First of all, Minister, what kind of impact would sanctions on Russia have on the French economy?
It would, first of all, have a very deep impact on Russia, on the Russian economy and on the Russian interest. But it's time for de-escalation. It's time for diplomacy. And there has been a major breakthrough last night, thanks to the efforts made by President Macron. There is the possibility of having a meeting between President Putin and President Biden. The two leaders agreed on the principle of a meeting. And I think that we should all make the best efforts to make this meeting a reality. Once again, President Macron played a key role to trigger this meeting between the two leaders.
So again, you put all the efforts diplomatically. If it doesn't work, what kind of sanctions should we be looking at?
I don't want to give too much details on the sanctions, because if we want the sanctions to be efficient, we have to trigger the sanctions when it's time to trigger the sanctions. But one point must be very clear. If there is any attack from Russia to Ukraine, we have a set of sanctions that are still available and that would hit the Russian people, the Russian state and the Russian economic interest.
How long do you think these elevated prices for gas and oil will stay? And how much pain is it? If it's a year, how much more subsidies can you put in place?
I think that everybody must be aware that till there are some geopolitical tensions in Ukraine, and taking into account the fact that there is a very strong economic recovery in the United States, in Europe, everywhere in the world, which is quite good news for all of us, we will have to face an increase in energy prices.
The French Economy Minister Bruno Le Maire speaking with Bloomberg's Francine Lacroix. Let me just tell you what's happening with Russian stocks. Russian stocks falling by the most since 2008 as the Russian Security Council meets. This is the intraday performance of the MOEX, the Russian index, down by more than 10%. As you can see, stocks sinking the most globally. A bond auction had to be axed. The ruble also slumping, so attention very much focused on Russian assets. As we hear from President Putin how we must decide on recognizing separatists in the Donbass. This would be a crucial departure from the Minsk Accord of 2014-15. Of course, we heard from our colleague Mark Champion. Putin saying, though, we're not discussing annexing separatist-controlled areas, but the role of the Donbass clearly crucial here. We'll continue to monitor. This is Bloomberg.
Almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu rame sekali, sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu, sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Live from London, I'm Anna Edwards. Welcome to Bloomberg Markets. Straight to some breaking news for you. President Putin saying that he will decide on the question around Ukrainian separatist independence today. So this is whether Russia decides to recognize, in their view, the independence of those breakaway states in eastern Ukraine. Russian-backed separatists currently in control of those, of course. And this would be politically very significant if the Russians did recognize these states as independent. That would go against the Minsk Accord, which was signed in 2014-15 to try and end the last last round of violence that we saw tragically in Ukraine. So we'll continue to watch these lines. And President Putin saying that he's going to decide today on whether Russia recognizes the independence of these areas. The Duma in Russia, the parliament, had voted to recognize them and had called on the president to do so. So far, he has he has not gone so far as to do so, and of course has previously said that they have no plans to invade Ukraine. Let us step away from that geopolitics for the moment and a little closer to home where I am, a little closer to where I am here in the UK. Let's talk about UK politics, because the UK Prime Minister Boris Johnson is set to announce an end to England's COVID-19 restrictions, with Cabinet discussing a so-called living with COVID plan today. This comes as Queen Elizabeth tested positive for the virus, with the palace saying the 95-year-old monarch is experiencing mild cold-like symptoms. Bloomberg senior executive editor David Merritt joins us now. David, good to speak to you then on this subject. There's been a delay, though, in all of this conversation and announcing all of this. We were expecting to hear from Prime Minister Boris Johnson round about now, and we're not doing. What's the talk about why the delay?
It's a slightly strange spectacle this morning. We had ministers filing into 10 Downing Street for this cabinet meeting. It's supposed to be sort of rubber stamping this new plan to, as they say, live with COVID. And then it all sort of fell apart. It turns out they couldn't have that meeting after all. It seems that there's a bit of a row that went on, effectively, between the Department of Health, so the Health Secretary, Sajid Javid, and the Chancellor of the Exchequer and the Treasury under Rishi Sunak. And it's about money, of course, and about how much they want to keep paying for testing, which is costing a huge amount of money every week to provide free testing to anyone who wants it. Of course, the Department of Health would like to keep that going a bit longer. The Treasury saying we need to rein in the cost. So what was kind of interesting, though, is that they hadn't sort of ironed this out before they went into Cabinet. You would expect normally for them to go in and all those sort of differences to be ironed out. Maybe a small sign, again, that Boris Johnson's grip on some of his most senior team isn't quite what it should be.
Yes, especially as one of the names that you mentioned there is somebody who's often talked about as perhaps being in the frame if there were to be some kind of leadership challenge. We've not seen that yet. Boris Johnson is still Prime Minister, of course. Let me just ask you then, what were we expecting to hear today? What were we expecting to hear from Boris Johnson around this time, which we might still hear later on today?
Well, it seems that some agreement has been reached in the last few minutes or so we may well hear from Mr. Johnson this afternoon. He wants to have this big moment, doesn't he, to say that Britain is moving on from this pandemic. You know, I think symbolically, isn't it rather interesting when you just mentioned about the Queen and her saying she's back at her desk. She's certainly living with COVID.
Yes.
And what greater symbol, I suppose, could the Prime Minister want to have than that? Then yes, she's tested positive, but mild symptoms, going to be performing light duties. He seems to be saying that's what he wants Britain to do. He said over the weekend in an interview with the BBC, it's time for Britain to get back to work. He wants people coming back into city centres, shopping, using the offices, all these things, and feeling that we should be moving on. Another bit of news we've heard this afternoon, there's going to be a fourth booster jab given to anyone aged 75 or anyone who's clinically vulnerable just within the next few weeks again. Another part of this plan to kind of insulate the public from COVID or any new variants and try to get the economy going again.
It's interesting timing, isn't it? This announcement, which was scheduled today, we're still watching for it, still waiting for it to come through, delayed a little. Interesting that it comes, as you say, at the time when we have just heard that the Queen, still the head of state in the UK, and